right, good morning, everybody. Been a crazy last couple of, last like 24 hours. And we have a lot to discuss, that's for sure. So, yeah, how's your guys' weekend been? Let me know. Hope you guys had a safe week last week. Happy to be on with y'all again. So yeah, we have a very exciting, exciting for some, um, week ahead of us, right? Lots of stuff has kicked off in the world, as you guys probably have seen. So this is going to be a time when experience shines. So that's why being in a community like the one we have, being around someone that proves they know what's going on. This will be my first wartime experience. Um, I'm pretty sure I know what to expect. It's going to be chaos. But that's the thing. The whole entire year has been pretty chaotic. In terms of volatile, I should say. Volatility has been at an all-time high, and you know, being able to navigate obviously opens up a lot of opportunity, which you guys have been able to see. Um, we've continued to point things out. It continues to go where we want it to go. Our validation process has shined throughout the last almost 7 months now, and it'll continue. For my private community, it's been shining for the last couple of years, since I was going, and teaching them. So yeah, you guys are gonna have a wonderful experience the next, rest of the year. We're officially in quarter three, like I talked about last week, and the week before that, right? The week before, week of, and week after. A new quarter adjustment is always looked at as potentially harder to trade. But clearly, those of you that are in my private community, those of you that get on with me on YouTube twice a week, you see that we've been able to call the market direction almost every single time. Okay, every single day. Doesn't mean it's 100% strike rate, right? I've showed you guys the 75 to 90%, 86 in the last 3 months, which again I posted evidence of in my free Discord, and I had a video where I broke down a lot of different stuff in great detail with my private community about that specific account. But nonetheless, accuracy is a lot easier to attain, and consistency is a little bit easier to attain when you have limited engagements. It's a very cheesy thing to hear people say less is more, but in reality, less trades that you take that are more high quality equals less risk. Because if you're over trading and over leveraging, if you just think about it, right? If you go back to the times where you over traded and over leveraged, if you go back and think like, okay, if I would, what would have happened if I just took 2 trades and I was only down this much, right? Would it have been easier for me to get out of that? Would it have been a lot less stressful, a lot less degrading to my mindset if I would have just followed 1 to 2 trades a day? If that, right? Only if there's something there do you consider a trade. You don't just get on in the chart and think just because you're sitting here, there's going to be an opportunity. You cannot think that way. Less is more, and the more experience, at least from what I've learned over the last almost 6 years. In August, it'll be my 6th year. But what I've learned over all this time has been, with experience comes wisdom, right? I mean, it should be kind of obvious, right? And specifically when it comes to trading, the more time you spend, the less time you want to spend on the chart. You realize that at first, because if you're like me, when I first started trading, I was automatically obsessed. Okay, I was spending 11 to 12 hours a day, neglecting relationships and doing a lot of stuff I probably shouldn't have done to try to achieve this. And looking back, obviously, it was beneficial to me. It kind of sped up my reps, you could say. my experience watching price, and of course, because I started with ICT after the first year of me trading, which I totally got destroyed the first year, as most of us do. But once I started getting into ICT's concepts and really understanding how this stuff operates and how predictable it could be, again, it just started reinforcing my thought that less is more. Even more so now, obviously, because it takes more experience for us to really gain certain insights, especially in trading, because we all come in as infants in the game. We don't know what risks are ahead of us. We don't know the right mindset. We don't know our own character flaws that are going to impede our success, And when time passes, when you learn these concepts or any other style of trading, if you have a good mentor, you'll notice that most of the time no one is taking more than 1 to 2 trades a day. If you need to take more than 2 trades a day to get a successful outcome, at least from my perspective and from ICT's his perspective, there's obviously something that you're missing and you're pushing too hard, because there will be days that don't make sense. And in the coming weeks, in the coming days, coming months, if this stuff is still on fire around the world, you're going to stumble across a lot of different roadblocks, and the over trading and over leveraging that you may have been able to survive through. It may come back to bite you, because you may over trade and over leverage in a particular time when it's not necessary. It's never necessary, and it's never okay to over trade. I don't care what people's opinion is. That's my opinion. And if you listen to people that know what they're talking about, they say the same stuff. Success leaves clues, and you got to be very observant as far as what habits certain successful traders have, because it'll save you and it'll quickly allow you to borrow their wisdom so then it can become a part of your trading persona, your psyche as a trader. Okay? So Tony said, definitely been great witnessing how trading is supposed to go. Yeah, and I'm grateful for those of you that have had the chance to sit and have had the patience with me to sit and actually listen to what's going on. Because, again, what I talk about is not rocket science. Okay, I point out very specific liquidity pools that I use every single day. I have a very, very specific process, which I go over every single week on Sunday for free with you guys. And I justify it by going in and trading live on Tuesday, and then everything is generally 86% of the time the last 2-3 months, which basically the whole quarter of last quarter, the whole entire quarter, and the quarter before that, quarter 1 as well. The efficacy behind what we do, the process and stuff, has just shined, And again, I'm not perfect. I don't claim to be the best trader. I never will. But I do have wisdom that I feel is extremely beneficial to traders that are, maybe a step behind me, even traders that are, a little bit further along in their journey that still suffer from certain issues that I've, personally been able to mitigate for the most part. Again, I'm not perfect. I still make mistakes. But one thing I never do is over leverage or over trade. I never do it. And if I have maybe 3 trades in a day, it's because of a specific scenario that took place. I didn't blow out my account the first 2 trades and then need to take another trade. Like, that's just, and I never blow the account out because of the risk protocols we talk about, right? So again, a lot of this stuff comes from wisdom. And again, I'm grateful that a lot of you guys that have been with me for, just even like the past month, you've been able to see things that are very, very clear. And if it's not fully clear just yet in terms of all the different elements, at least you're able to witness something that truly works outside of the hands of ICT. And I'm not some mental giant. I'm just a normal individual that's obsessed over this stuff. And I've put in the time. I've had, people that have helped me in a similar way that I look to help you guys. I've been seeing a lot of good results from students, including Tony in the chat. He's going to become spectacular, just like every one of you that is open to following rules and willing to learn. Okay, because the realities of trading become very apparent when you're around a community like this. I don't sugarcoat stuff. I don't sell you a dream. I don't even, try to push you guys to pay me to be your mentor. There's always an option for more assistance, right? And obviously time is valuable, especially when someone's put so much work into things. So hopefully it's understandable that I would have something secluded like that for certain individuals. It's not for everybody. It's an apprenticeship. It's not a course that I just start shoving down your throat and then send you on your way. It's a very intimate type of learning experience, and accessibility is opened up pretty largely for those that do want to put that investment into themselves and also into me as your mentor. But outside of that, students like Tony, students like Chowezi, and a few others that are just on YouTube, they're already getting benefits just from that, and some will only require that amount of assistance. Plus, I have my free Discord where I'm active in there too. I answer questions as well. So in both directions, I have availability wide open for you guys to get what you need, and whether you're here for a short time just to get what you need and leave, or if you're here for a long time and want to be part of the family long term, you have options. And nobody's doing it like we are except ICT and a handful of ICT traders that are worth listening to. Like, I'll shout them out. At least one of them, Jade Cap, he's worth listening to. A lot of the stuff that he applies have a lot of overlap with what it is that we do, from the higher time frame to the lower time frame. But he's not really a lower time frame trader. He'd prefer to hold trades a little longer. So his style is a little different. What he chooses to focus on in some cases is a little different. But there's a lot of commonalities with those that are successful using ICT concepts. And a big portion of that is the discipline, risk management, and how you view your engagements in the marketplace. It's one very strong commonality. And again, 1 to 2 trades a day. You don't see Jade Cap or anybody else taking 50 trades in a day or over leveraging because they took a loss, or doing these mistakes that plague traders because it feels right in the moment. But most of the time, it's not. Almost all the time, it's not. But for me, every moment in the market is something is a time where I don't think it's required or necessary to overtrade and overleverage. It's just certain things just are non-negotiable, and I have a lot of non-negotiables that I share with you guys, and we'll continue to do that until as many of you as I can get across the finish line. I'm going to continue until I get as many of you as I can across that finish line in one way or another, right? Whether you're here on YouTube or you choose to invest in me as your mentor, you're going to get the value you came for. Okay. So yeah, again, there's a lot of stuff happening, wars and different things. It's going to have a crazy impact. And when we start talking about the chart, if you're thinking about the indices, there's a lot of conversations about oil lanes or transport lanes getting turned off. Like, I guess there was an announcement today that's going to affect gas prices. It may affect just overall markets in general. Oil and gold are going to be massively, they've already been massively impacted by what's happening. And I think it's just the heat is going to get turned up even more. And with all the chaos, there's going to be massive volatility. But again, you need to be able to really trust in the 3 PDA rule and the ways that you invalidate and validate opportunities and risk control. Okay, given these circumstances, yes, there's going to be massive opportunity for positive results. But if you don't know what you're doing, there's going to be massive opportunities for you to blow your account and derail yourself. So again, the discipline rules, the structured, systematic things that I talk about, they're going to shine even harder in the coming months, coming weeks. All right. So again, these are times when conditions are more difficult and there's a lot of instability and a lot of chaos. There's opportunity, but it's going to be very testy. There's going to be a lot of manipulation because they never let a catastrophe go to waste. They never let a war go to waste in terms of manipulation. and having excuses to do things that are unorthodox when it comes to how price generally delivers. So again, it's going to make it very obvious why being around a community like the one we have here, or in my private community, is so important. Okay, so I just want to make sure you guys are aware of the risk profile of what we're involved in. That's why I'm spending time saying the things that I'm saying, and just highlighting certain stuff before we get started entirely. Okay, so keep that in mind. 1 to 2 trades a day. Cut your risk. I have not had 1% risk for like the last month and a half. Okay, I've had 7.75% risk, and then 0.5% if I've taken a loss, which I have. 86% is still not perfection. Okay, so keep that in mind, especially if you're just learning. Keep just learning. Focus there. Don't focus on taking trades only, because once you take a trade, if you're studying and trying to learn, it's going to derail you from learning and gaining the experience you're showing up to the chart to gain, because all you're going to be focused on is whether you're going to get stopped out or not. You're not going to think about, okay, what's positively in line with what I'm thinking about, right, related to the entry I'm in. What is it targeting? All that stuff will go out the window if you're entering trying to make money too quickly, even in a demo. And if you're in a demo, most of the time, people that are just starting, they're going to take the entries in a demo and think, if a loss takes place, I wouldn't have taken that anyways. And it's a habit that gets built, and it'll bleed into what you do live. So treat a demo account. I know some of you guys are still in a demo. Treat the demo like it's real. Try to think of the emotions that you'll be feeling if you take a loss. Try to also have a demo if you are in that phase of things, which there's nothing to be upset about if that's the phase you're in. But put the demo sizing in terms of what you realistically think you could fund in a personal account, whether that's $1,000, whether that's $500, which I don't recommend at all. Anything less than $5,000 in an account, USD, is pushing it. Okay, you're really, really making it hard for you to have normal risk. And a lot of times, if you're trading futures, you can't cut the risk unless you're trading micros, which I recommend. There's more versatility, at least in my opinion. And I mean, JadeCap even trades that stuff too. A lot of the big traders, there's nothing wrong with trading the micros. It gives you more flexibility and more accuracy, more versatility with your risk percentage and managing risk properly. And also opens up a larger opportunity for more dynamic partials. Again, if you have a large account, then it is what it is. You don't have to really think of micros if you don't want to. Even with a large account, I still like micros because of the versatility in risk control. And the fees for each contract, because if you trade live, you have to worry about fees, right? That's another reason why overtrading is ridiculous and over leveraging, because the larger size, the more trades you take, the more the more fees you're going to have to incur. Okay, and again, most people don't talk about this because they don't trade live. Okay, there's fees that you got to worry about. Overtrading and taking a bunch of losses will not only make you take the losses, eat that to your bottom line, but you also have compounded fees that add up. If you take 20 trades, if you're trading the normal E-mini contracts, I think it's like $15 or something like, or $5-10 per thing. I can't remember exactly what it is. For micros though, depending on which asset you're trading, for like NASDAQ for example, the fee is like $2, right? So I mean, that's a lot better than the large fee for most people, And again, you can get 10 micros is one E-mini contract, So if you want to trade like you have the normal size in a E-mini, but you still want to trade with the micros to have a more versatile risk profile or partial profile, then you just use 10 micros. That'll equal to one E-mini contract, So again, you got to think about these things, okay? So yeah, maybe some of you guys didn't know that, so hopefully that was beneficial. Again, if you guys get value from the content, you like what I do here, you're seeing progress and whatnot, definitely don't forget to like the video, subscribe to the channel if you haven't already, and spread the message to people you think can benefit from the community and maybe just want to be around a community that can be helpful to them in their journey. Help me help you and help others, right? And continue to see the channel grow so we can get in front of people that need the help. So yeah, with that stuff being said, again, we have a very busy week. I think it's going to be pretty interesting. We have stuff that's happening geopolitically, plus a jam-packed news week. So there's going to be massive volatility and movement. It's ironic that this type of event took place right at the start of a new quarter, right? The new quarter just passed last week, right? So, we just entered the new quarter, and now there's geopolitical heavy-hitting events taking place, plus a jam-packed news week taking place as well. So again, be ready for volatility. Again, it's going to be very, very important for you to have risk management. No more than 1 to 2 trades a day. That means that you should only give yourself 10 trades maximum per week, preferably less, right? And again, it's going to test your ability to hold trades. It's going to test your ability to be satisfied with the minimums, which I promote you guys to do if you haven't reached profitability or are just in a demo, okay? Because you got to grow into larger delivery. Larger delivery, bigger ranges, larger moves come from your ability to frame things and navigate things from higher time frame to lower time frame. Okay, a lot of my setups are framed at least from a 15 minute. A lot of times I try to look for a higher time frame daily or 4-hour PD arrays to be met or targeted to set up a further move, because then you can counter trend trade. But once you get into those types of levels and you're able to frame things from that higher time frame, you'll see that that's where the big moves come. And then once a higher time frame level, like a daily order block, daily fair value gap, 4-hour, even 1-hour levels hit, if you're able to frame it from those areas or trade to those areas, you're going to see a lot more massive price delivery, more meaningful price delivery. And then that means that when you drop to the lower time frame within a kill zone, try to take an entry inside of a macro time, you're going to have the higher time frame structure and framework behind that small time frame move, right? So precision comes from the lower time frames, and I guess volume, how big the move is, will come from your ability to frame from the higher time frame. Okay, time and price, right? Time has to do with macros and the kill zones and the day of week, and then of course price has to do with PD arrays, liquidity, and just what price is doing in the chart. Okay, so that's time and price. That's why time and price is so important. Okay, but time first, then price. If you're a day trader, right? If you're a swing trader, it's good to position yourself around those same time elements. Get yourself involved around those, because the market moves and sets things up during those different blocks of time, from the kill zones, sessions, deeper into the macros for more precision timing elements, right? So yeah, again, we have probably going to see a gap, a pretty heavy gap across different assets related to the US dollar for the start of the week. I wouldn't be surprised if we gap lower. Again, we'll discuss what we're going to expect here in a little bit. But we have a bunch of news. So expect Power 3. That's your perspective going into every single week. Power 3 is the first thing you think about. What can it possibly do to start the week? What higher time frame PD arrays can be attacked? What news events can instigate the push to a PD array that's going to be reactive? And then what PD array what news event later on in the week, with from Tuesday and beyond, can set up like the real move if we see like some manipulation take place as a result of this, going against whatever narrative we come up with, right? So those are some foundational perspectives to have when you start the week. Hopefully some of the other things you guys are also going to take into consideration too, about risk and the different things. We're going to glance at COT today too, so if that's something you guys are interested in. I don't really talk about it a lot here. I talk about it much more in my private community. because it's not a be all end all, and some people overcomplicate it, and just they want what they want. But for those of you that do want to get more detailed and kind of get some of the back end things that help me do what I do, it's not a be all end all. It's just an extra confirmation, some of the fundamentals. But those of you that want to hear that type of stuff, we'll talk about it a little bit today. Just to go with the quarter adjustment and try to see if there's any back end stuff that can help us gauge a possible quarterly shift, which may take place, in the coming weeks. Okay. So yeah, with that being said, keep Power 3 in mind and the news events in mind as well. It's going to be a very dynamic week. Okay, so let's go start at the first asset class, which, as always, the bonds and yields. Okay, we still have that weekly or 2-week fair value, the 2-week order block midpoint that we've been observing. You can also see that there's this fair value gap that has had some work done to it in terms of returning back to it. So let me put that there. So yeah, we could see how prices had a pretty strong response. I could actually remove that. We got a volume imbalance in here too. So volume imbalance, fair value gap here, the middle portion of the order block here. So those are 3 PD arrays for us to watch. And if it was to get above here, because remember I mentioned this over the last couple of weeks as one of our 3rd PD arrays. So we can look at this from the 2-week and we could see, is it present on the weekly? Yeah, it's present on there too. But we could see a little bit more clear if we want to kind of clean it up a little bit from a higher time frame view, that we have this fair value gap inversion potentially, or reclaimed. We have this order block bearish, and we have this volume imbalance. Okay, we have SMT at the lows. Okay, so if we were to get above this fair value gap here and turn it into an inversion, we wouldn't necessarily need to see price break this high for us to start considering the other side of the market. That could end up being a very close target if it was to do that type of stuff. We do still have this quarterly order block that then led to the bearish decline, which I mentioned over the last couple weeks. It's still present, but I can say that if these levels end up getting violated, that's going to really test the quarterly order block and the interest for price to want to go lower still, especially since we're in a new quarter. If we were to just jolt through this stuff off of the SMT that's been in place and the consolidation here that we've had, I think that could be a trigger point or line in the sand like you guys see here for us to then look to consider the other side of the market. Okay, so that is pretty much what I'm going to pay attention to, keep my eyes on in terms of gauging what it's going to do until these levels start to get really pressed into further. We're seeing some slight signs, but this is not enough. Okay, it takes time. Bias changes sometimes day to day because of retracements and consolidation. Narrative on the higher time frame, which is what we're digging into every week, doesn't change dramatically on a daily basis. This is a very here. Let me turn my volume down. Has it been a little bit loud? I'm sorry, I totally didn't notice. Tell me how the volume is for you guys. I don't want to be screaming in your ear, right? Last week I had an issue with it being not loud enough. Today, it's pretty normal now. So I didn't change the settings. But yeah, let me know in the chat if the volume's okay. I just turned it down a little bit. See, I don't want to be screaming in your ear. Just throw like a 1 in the chat if it's good. No, you were good? Okay, cool. Dang, the lag today is pretty intense. Just notice it's a pretty long lag. It's like 20 something seconds. Holy crap. All right, well, since we're good, we'll just continue. All right, so with that being said, again, that's kind of all I'm going to focus on. We don't have to again do too much on the higher time frame. Again, just remember that narrative doesn't change on a daily basis. Bias can vary because we can have a downtrend narrative with retracements that take place, and unless our validation levels get broken, we continue to hold on to that assumption, but we just be flexible with our bias on a daily basis, because that bias could set up the continued down move, but the bias may, day to day have some bullishness take place while it continues to set up premiums to then target more discount. Okay, that's the importance of us being on the higher time frame, which I talk about continuously, because it roots you in the actual story. And when you're rooted in the actual story, you're not going to flip flop. You may take a loss if it retraces back against the downtrend, if you're just trying to learn how to do all this, right? But again, you want to keep in mind that bias and narrative are two separate, different things. Not everybody classifies it that way, which again is just a testament to the personalization and different perspectives we have. But that perspective helped me stick to a higher time frame narrative I came up with when I used to flip flop constantly, because I'd have one bullish day and think that the weekly bearishness is now invalid and not worthy of engaging. Okay, when it was just a couple of days went against it, and then especially if you take a loss, you start to second guess your higher time frame idea. You second guess what the narrative is, and then you disregard it, and then you spiral out of control and overtrade and over leverage, and it just invites the bad habits. So not only does being rooted in the higher time frame help you from not doing that type of stuff, but it also helps you stay in line with what's actually happening and not get fooled like 99% of people do when price goes against them in certain circumstances. When you have the higher time frame narrative, in this case being still bearish somewhat until these levels are violated, a retracement like this wouldn't stop you from taking more shorts. It will tell you that the price is going against the narrative for now. So maybe targeting or trying to frame out a premium PD array based on current price delivery may serve you well if you feel like you want to engage. Or it could give you patience to wait. Let price retrace into the higher time frame PD array that it's headed for, potentially going against the narrative, and then try to see and be patient to see what it'll do from there. Is it going to displace again like this? Right? It retraced all the way up here and then ended up rejecting. Okay. It did a little bit of work back inside this. And of course, you could see this order block and the fair value gap here had a very strong impact on this. Notice the bodies, right? The bodies closed inside of that after price ran higher. How many people you think saw this big bullish candle and started thinking buys? How many people you think took a loss in here and tried to push buys, not thinking about the things that we've just discussed? How narrative doesn't change just because there's a retracement on the higher time frame. Bias does change. So the bias here for this week, because it's a weekly chart, 2-week chart, was bullish in some capacity, right? For maybe a couple days straight. Imagine, how would you have felt if you weren't listening to this advice, or if you didn't hear this type of advice before? Price probably would have fooled you, and you probably would have switched to say this was the NASDAQ, right? You probably would have switched your overall view, and then price violently, aggressively pushes away back in line with the narrative that didn't change. Yes, the wicks can sometimes trade outside of stuff. I can say that if this closed above this high, it would have been a different story, but it didn't. All it did was wick and then close back down below. That is not an indication that price is going to go, in this case, higher. Same with this. This was not an indication, given the fact that our 3 PDA rule was not violated. It's not an indication just because a wick happened that price is going to now turn around. It was just a wick. The wicks do the damage. It's manipulation most times. And then the bodies will tell the story, like you could see here, right? So you want to keep that perspective at all times when you're doing your narrative analysis, because, again, you don't want to be fooled. And bias changes sometimes on a day-to-day basis just to set up into a premium array if it's bearish, or to set up above a high, or to sweep a high if it's bearish. And then, same thing if you're looking for bullishness, right? It'll dig lower to a discount on the higher time frame to then set up the big move back in line with the narrative if the narrative was bullish, right? So yeah, I hope that makes sense. That's one of the things that took me a long time to really become comfortable with. So I hope that I'm able to speed that process up with you, giving you the wisdom that I've gained from the years of implementing this perspective, because it's served me well. If there's one thing that I can say that served me well, or two things I should say, is that perspective, being rooted in the higher time frame, and not over trading and over leveraging, and managing risk properly. So risk management and higher time frame analysis, being rooted in those two things, making those things a sole priority. Notice how I didn't say entry tactic. Notice how I didn't say anything like that. Because if you can't have those two things in line, if you don't know where the market's going to go, how to call it reliably, and how to manage your risk properly, if you're not cemented in that, entry tactics, no matter what you operate within, you can have every one of them. None of them will work. Okay, you'll always be teeter-tottering back and forth, either in deep drawdown or teeter-tottering back and forth between profitable, making money, and then giving it all back. Okay, the principles that we talk about, just those two things, can help you combat those issues: over trading, over leveraging, and going from break even to profitable, or just to get you out of drawdown so you can, at a minimum, become break even. If you're in drawdown, that should be a goal, to become break even. And then once you're easily able to be break even, try to figure out ways to get into profitability, which is some of the stuff that I talk about in terms of perspective and process. Okay, so yeah, this is my assumption for this. I'm going to watch how this fair value gap's treated. It's going to be very important. The middle portion of this 2-week order block too. You can move down to the weekly. See these consecutive up candles. That's an order block, right? Just those create the 2-week. Consecutive up candles create bearish order blocks on upper time frames, and consecutive down candles also, if price rampages higher, would create bullish order blocks. All right, so on higher time frames, if you're looking at it from a lower time frame view. So yeah, this is part of my line in the sand, the upper portion of this fair value gap. And then if it gets above there, again, I would be interested in seeing the high taken. Otherwise, if we end up rejecting, we still have 1 PD array, 2, 3 PD arrays that should hold price if it's going to continue to go lower. Okay, so we're going to continue to hold on to that until fully proven otherwise. We do have relative equal lows here on these other ones. We do have these extremely obvious relative equal highs with a fair value gap up here. So if we prove that we want to go higher, if the levels that I just mentioned are traded through, then again, we have a very, very logical, easy to see target that may end up becoming part of the new narrative as a result of the new quarter, possibly presenting us with a quarterly shift from bearish to bullish. All right. It's been a very sideways market with all the stuff that's taken place. Just like the last couple of years, the 10-year and 5-year have kind of been sideways. But we'll see if that changes. I don't think anything too dramatic should happen. Maybe it does, given the changes that are happening in the U.S. So we'll see if this ends up being something reasonable to target long term. The whole quarter could end up getting us up there. So we'll see if that wants to be justified. But again, we're gonna have to wait for this asset. Right? Remember, the bonds dictate or influence heavily what the foreign currencies are going to do, what the indices are going to do. All right, so that's why this is important. That's why we start here for those that may be new. We get to indices and stuff later on. We have back-end information. Okay, stuff that supports an idea that we're going to come up with. It gives us an easy clarity framework, a pre-clarity framework to carry on into the indices, on into the DXY, so on and so forth. Okay, so again, my line in the sand are going to be these levels, this upper volume imbalance, which is on the 2-week volume imbalance, the bearish order block, midpoint, and the fair value gap here. Because again, if we blow through that stuff, why are you going to force sells or interest to go lower? So yeah. So I hope all that made sense. And with that being said, we will. Again, I just want to remind you before we move on, think of power 3 always. A start of a quarter, there's power 3. Start of a week, there's power 3. There's an open price too for all those. Start of the day, there's an open price. A power 3 dynamic for daily candles, weekly candles, quarterly candles, yearly candles. There's a power 3. ICT mentioned that on Twitter a couple years ago. Like 6 years ago. I have a screenshot that I posted in my free Discord that you can go check out from that moment, long time ago. But yeah, I obviously didn't see that 6 years ago. I saw it later on when someone shared it. So yeah, it's very interesting, right? So keep that in mind going into this week, this new quarter, and this new month that's coming as well. Okay. So we go to the yields now. Hopefully all that made sense. If you got questions, obviously let me know. But yeah, so very similar with this as well. Things have not changed overall. If we go to the 2-week, see a bullish order block. Fair value gap down here is a little deeper. We do have a bunch of new week opening gaps scattered around in here. So those are going to be important to watch as well. But for this, we have a volume imbalance, swing low, and then we have this order block. Okay, so similar to the other, the bonds, which is reverse correlated to this asset, as you can see. We're going to watch this weekly order block midpoint. And if I could find it. Okay, so we're going to watch how price behaves with that. If you take it from this low to this high, I have equilibrium mapped out. So anything below that is a discount. Okay, so from the high to the low, after we have framed out this range here, this overall range, we could see this is a discount. What did price do off of this fractal high that formed? All it did was retrace inside the bullish run. All it did was retrace to a discount PD array. An actual discount PD array inside of an actual discount within a range we just mapped out using the most recent fractal low, very important, fractal low, not just any old low that you find, and the most recent fractal high that set up this range. Okay. I was doing my weekend analysis on the bonds and yields. I noticed we are at the equilibrium of the weekly range on the 10-year yield. Yeah, with the consolidation. Yeah. Equilibrium is also the midpoint of the inversion fair value gap and order block. Can't be a coincidence. No, it's not a coincidence for sure. It's all purposeful, right? So that level is going to be very reactive when price decides to want to run away. Okay, because of all that overlap that you see, when things overlap, multiple PD arrays on multiple time frames with multiple areas in price on the different assets that are correlated. In this case, these are all pretty heavily correlated. It's essentially very similar products. But when you see overlaps like that, it very much highlights a level that there's a lot of business being done. Okay, a lot of interest for the big head honchos to do whatever. Maybe commerce, maybe buying the bonds and yields. If we're talking about this asset, there may be a lot of purchasing going on around those areas. You could just think of it as activity taking place around those levels. And the more things that are overlapping in terms of those specific levels we look at in terms of PD arrays, again, it's an important level to keep in mind, especially if it's an equilibrium and we're inside of a consolidation. Okay, because consolidation, something very interesting if you go study this aspect of consolidations, when it comes to being in a consolidation, equilibrium, when price is going to trade outside of the range it's in, a lot of times we bounce back and forth, right? But when it's about to break out of that, or when it does break out of it, depending on what news event or time is needed, it's going to be rooted from the equilibrium point for the most part. That equilibrium point ends up being the fair value, right? Overall fair value, and ends up, for whatever commerce or stuff that takes place, it's going to be a moment or a place in price that is used to break outside of the consolidation for the most part. A very interesting study there. I've talked about it before in terms of equilibrium and navigating consolidations. Maybe I'll do a full video about navigating consolidations. But yeah, that observation you just did, Chowezi, is very a very fun study. So we're failing to close below equilibrium. Yeah. You said for the bond yields, right? Yeah, so this market here, the 10-year, right? Again, what he's basically referring to, take it from this high to that low. Okay, we're failing to close below. Not only on the 10-year, but we're also failing here too, right? So we're failing here to close below. I think it's a little less clear on the 5-year. So, we'll have to see what's going to happen with that. So sell side's taken here, buy side's taken here. Take it from this low to that high. This one is somewhat closing below, right? But slightly, right? So again, we'll see what happens. But you want to make sure you're watching what I've just mentioned. When there's overlapping levels, lots of overlapping levels merging with the consolidation, equilibrium, or any other time, right? If there's any overlap of multiple time frames, multiple PD arrays from the higher time frame to the lower time frame, at a specific level, it's going to be very, very reactive because there's a lot of activity taking place. Who knows what kind of activity? Purchasing, commerce. There's lots of stuff that happens outside of us just being traders that impact the market. But obviously, the algorithm and whatnot is still taking place. But there's still, specific fundamental elements that do have slight impacts in terms of what takes place in the markets. Okay, so there's a lot of buying of bonds and overall, notes from the T-bonds. So there's been a lot of activity, trying to stimulate the bond market. That direct impacts to the overall interest rates, because that's how countries make money too. They sell bonds, right, and countries buy it. It's kind of how they also finance their debt, is by selling bonds, because these are products that countries sell, right? It's every country that has a bond market or with the yield market, right? The yield market is generally the yield that comes from you buying bonds, right? So yeah. It can get real complex. Again, that's not stuff that you necessarily need to dig too deep into. But again, what Chowezi was saying about the overlapping areas, it's not a coincidence. It's something that you need to pay attention to. Specifically, it's at equilibrium, right? So that equilibrium point, again, if it breaks out to the buy side, it's probably going to do it very soon. Consolidation can last for a while. It could last longer than you're willing to hold a trade. But again, it's patience. You got to have patience. I don't trade this asset. Some people I know do. But again, we use this to influence or build a narrative, a pre-narrative before we get to the other assets like DXY, which is directly impacted by the activity that happens in the yield market. Okay, so yeah. So again, we're going to watch this equilibrium. We do have this gap in here. If we zoom out a little bit on the 2-week, let's see, we got the volume imbalance down there. If we drop down back to the 1 week, we see that it's down here. Again, so we got equilibrium, we got the order block, we got the volume imbalance, we have multiple volume imbalances in here. We have this swing low as well on this weekly chart. I do think that if this swing low can't hold up, given the fact that this swing low is so deep into the order block, deep into a discount, if we get strong displacement through that, that's going to have a similar confirmation impact as this displacing above this fair value gap in here in terms of us gauging the narrative. Okay, so that would be an indication that price is going to go higher if it breaks above here. And for me, it would be an indication that this is probably interested in blowing this out or digging deeper into sell side if we get a displacement through this low, because then we'll be closing now below the 2-week bullish order block that's been holding price up here. But we've been hanging around here a little bit too long for my liking. So, we had a pretty strong response when it was first created. We did take out a lot of buy side, strongly took out buy side, and we have rejected very harshly away from the high. So again, we're going to have to see these levels hold and price start to displace, maybe get back above this, if we're going to then look to want to get back in line in terms of timing for the buy side delivery to continue here. Otherwise, we're going to have to just wait and see what happens, right? These levels in here are the things that I'm going to watch for the yields, and I hope that the bonds made sense too. But depending on what happens here, because we're at equilibrium, it's a 50-50 shot. If we're going to continue, because structure hasn't been violated to disrespect the run higher, if we're going to continue, we got to leave these levels intact and start to displace, get above this, which would then make me target the high here, high here, high here, the wick quadrants, and then if we can blow through those, we can eventually get up into here, which is relative equal highs on that monthly view. But that's a little far away for our liking. Prior to that, right, earlier targets can be these weekly highs here, or the weekly low, right? Patience. Tony said patience is definitely needed for this week. Yeah, just beyond given the circumstances, just from the election, there's been a lot of changes taking place. So patience has been more important than ever. It's always important. Patience will make or break you, because if you're not willing to wait for the things to set up, just like if you're not willing to wait to cross the street until, if you're not patient enough to wait till no cars are coming, if you're just going to cross the street, what's going to happen? You're going to get ran over by a car. It's the same with this. If you want your model to work, you're going to have to wait. There's things that need to take place in order for you to be consistent and be able to get in line with things that are worthy of your time, that should result in positive results. You have to work for positive results in the industry. You can't just come in here, throw any random trades in because you just want it to move, and then, price is going to cater to you. It doesn't care. Okay, the market makers and people that run this stuff don't care. This isn't here for you to be successful. So they want you to be impatient. They want you to be greedy and hold on to things more than you should. They want you just to come in here with a dollar menu mindset, freaking McDonald's perspective, like in and out, quick, with no study at all, nothing, no effort needed. They want you to think that way. They want you to think that indicators are going to be the be all end all, when indicators are lagging and you're showing up late to the party, when an indicator shows you buy or sell, no matter what they are. Okay. So, just patience is definitely necessary at all times, because if you don't use it, use patience or have patience and discipline, people that do have those characteristics are going to be funded by your losing positions, and everybody else that doesn't want to have patience and wants to fight it. Okay. You want to be on the other side of the equation. You want to be the one that has patience and, discipline and has a process that's proven, which you guys are becoming aware of and hopefully being able to implement, because it puts you in the best position, to take advantage of the old you, essentially, that wasn't disciplined, that wasn't focused on process, that didn't know what the hell was happening, So yeah, thank you, Tony, for re-highlighting that for sure. Let me actually pin that real quick. So yeah, it's very, very much important. Okay. And good morning, Freddie. Appreciate you hopping on, brother. And again, just another reminder, definitely if you guys like the content, if you get value, don't forget to like the video, subscribe if you haven't already. Greatly helps the channel, because, what we do here is worthy. Okay. Not only just because I say it, right? Just because of the way that I've seen people transform just in the last year, from where they were, showing up here with blown accounts, over trading 50 million blown accounts in funded accounts, not being able to even make a positive day, let alone a certain amount of money. They transform from that to really seeing the possibilities open up, and the stress get minimized by knowing what they're looking for, knowing what is required, and just seeing the actual realities and how you need to actually operate mindset-wise and process-wise as a trader from their time being spent here. So I appreciate all you guys that have supported me so far. And yeah, we got a lot more things to talk about, so this isn't everything that we've talked about. There's so much more, plus experience and watching price and getting that real-time overall just experience, But yeah, so again, back to the yields and the bonds. Hopefully the bonds made sense. We're just watching because we're in consolidation. We need to see some type of breakout and what levels are going to be respected. What specific levels are we watching? I hope that is clear from what we've talked about for the bonds. And I hope it's also clear here for the yields as well. Okay, nothing's changed structurally yet until something proves us otherwise, that it wants to go lower. So obviously the narrative is still somewhat bullish, One thing too that you want to add is this wick here, the quadrants, right? If we blow past the middle portion of this wick, that's also significant. Aside from these levels down here, that is like a pre-level that if it's violated, it may set the stage for us to then get down to these deeper levels. Because if this is going to go higher, down wicks, the midpoints should be able to act as support as price pushes through the buy side. Okay. Again, this is also a fractal low, so it's important if it gets violated or respected. Again, this wick too, I didn't mention it earlier, but you want to make sure you have the quadrants labeled in that wick, the 25, 50, 75, and then just the entire range of the wick. Notice how last week it beautifully reached into, must be random, right? But it beautifully reached into the exact level that's the mid portion of the wick. And then it just rejected back, creating an indecision, slightly bearish candle for the week, right? Reaching into the bullish order block on that 2-week chart. Okay, so we're dancing inside that 2-week chart, 2-week order block, and we're also, from this 1-week perspective, inside of the equilibrium from this low to that high. So we're in consolidation as a result of us hanging around that level, and you could see it in the price delivery. But we also have this wick. Okay, so we want to see, can this wick hold? Can we stay above equilibrium? Can we displace above this area up here? If that's the case, we are for surely certain the buy side is still not done until those levels end up turning around and getting violated. And then, of course, we use our 3 PDA rule. Okay, so yeah, I hope that makes sense in terms of what we're looking for the bonds and yields. And yeah, so we use that information that prints for later on understanding when the time comes. But for now, it's stuck in consolidation, and we're watching these levels to get more information. You've probably heard ICT say that before. I need more information. You've probably heard some good traders that know what they're talking about sometimes say, I need more information for a particular asset. That is the state that we're in right now. The narrative is still bullish. Structurally, nothing has changed. So I'm not out here looking too short right now. I need more confirmation in terms of certain levels justifying whether price is going to drop or if it wants to continue going higher, which I hope I've laid the levels out that I'm watching clearly. I hope I've laid them out clearly. And then what my opinion will be if certain things take place. If we get above this weekly fair value gap and displace, beautiful. That is supportive of us continuing to go higher, in which case we could then target previous week's highs as price looks to, maybe target this wick. If we blow through those levels, then we move on to the wick up here. And if we blow through the wick, again, we have relative equal highs on that monthly chart. Okay, if we break down below this low, we then have a weekly low. Here, we have some of the fair value gap in here. It's been fully traded to and then through, right? So if it's going to be bullish, it shouldn't have to come back into that level. But if it does get down there again, you don't push buys just because the narrative looked like it was still going bullish. There's levels that turn off your interest for particular opinions. And in this case, I hope the levels that I'm highlighting here make it very clear as far as what levels will turn us off bullish and then what levels will turn us on to be bearish. Okay, so yeah, I think that's pretty much the gist of what we're going to talk about here for the interest rate markets. We're stuck and need more information. That is the assumption for both the interest rate markets. So yeah, hope that made sense. So yeah, if we go to the currencies here, let's move up to the monthly. For my currency traders, or for those of you that trade any of the assets we look at aside from the currencies, we're going to use this to help us out as well. Before breaking out, what usually happens with 10 years. Honestly, I've never seen a war. I've never experienced a war, so this is going to be a first for me. I do assume that war is negative for most instances. It's very hard on economies. We're not technically involved in the war, at least from the Americans' perspective. The president, he does not classify unless Iran attacks us aggressively and hurts an American citizen. We basically just assisted and took out something that should be taken out anyways, because a crazy country or leader, not the country, the people of Iran are amazing. I have some students that are from Iran that are keeping me updated with what's happening, which is really insane. there's going to be a revolution there, at least from the people that I've talked to that live in Iran. They want new leadership. And so, people are getting treated horribly. So, whatever you believe, obviously, is what it is. It doesn't really affect us here in the States. But for the Iranian people, I do pray that they rise up and take back control of their country from these people that have terrorized not only them, but the world. The leading sponsor of terror is not the Iranian people, it's the Ayatollah that are in that country. They are very vicious individuals, and they've been suffering for so long. So hopefully good things happen, because it'll be good for us too. If we don't have an enemy in the Middle East, but a partner, it'll be better for everything, because we're partners with a lot of different countries out there. Saudi Arabia, multiple others, set aside from Israel, right? So if all of the people can get along, that'd be great. But the main sticking point with the terrorism, the main thing that has overlapped is the Iranian regime, the IRGC. So hopefully, for the sake of my students and the good people of Iran, for the good of the world, the regime can be changed, because they're nothing but chaos. And it's unfortunate, the stories I've heard from some of my friends that live in Iran, and on top of that, some of my students that somehow are able to trade within the craziness that they've had to go through. So yeah, one of my students, actually his sister, was tortured for pulling down her hat thing, the hijab, I think it's called. She was tortured until she obeyed in the prisons of Iran, just because of that. So I can't imagine what people go through in there. So we got to keep our prayers up for the Iranian people, just for the world. Hopefully things don't spiral out of control. Nobody wants war, including our president in the United States. But some things just have to be done. Hard decisions have to be made. And we're going to go for a ride, that's for sure. So, Freddie, to answer your question, I'm not really too sure what's going to happen with the bonds and the yields based on war. We're all going to see, because there hasn't really been a major war in the last 6 years that I've experienced as a trader, let alone experienced it when I have understanding of what's taking place in the market. So we're just going to have to see what takes place. I do think that the currency, or the U.S. dollar and U.S. assets, because war is not good for the economy. We're not a wartime economy like Russia has become. But, I do believe that it's going to be something negative. And we can't afford in the U.S. to have a full-out war with anybody right now. We're $37 trillion in debt. We just hit that milestone. So, we all got to pray that things are going to be calm for the sake of, peace, but also for the U.S., because, man, I don't know. It's going to be crazy. But, yeah, we'll see. I do think that things are going to gap lower in all U.S. assets. And the things that are, outside of the U.S., like Euro and GBP USD, they may continue to rally as a result, because if the U.S. dollar declines, we'll see, right? We don't know for sure, but we'll see what's going to take place. But yeah, just make sure you guys have your prayers up for Iran and just everybody involved, because nobody likes to see war, But yeah, we'll see, Freddie. We'll see what happens. I'll be here to walk you guys through and commentate on all the different developments that take place in the market, as always. So you can be calm and peaceful about the volatility. As long as you follow the rules, you do not overtrade and over leverage, and you stay connected to what we do and what we talk about, you're going to gain some very valuable experience. Just from, I've navigated COVID, right? I've navigated, many different things that take place, from the election, right? The swap from, previous to what we have now. So, and we've been very consistent throughout the whole year. That's been one of the most volatile, most difficult years ICT also has ever traded within, which he admitted early on in the year. It's been the craziest environment he's ever engaged in. Yet he's been consistent, and we've been consistent here in the WMG family. So just because there's chaos doesn't mean things change. It just means that volatility is going to be increased, and it means that risk exposure needs to be very, very much at the forefront of your mind, in terms of just don't overtrade and over leverage. Only take setups that make sense to you, and target the minimums. Get in and out, because the gap risk, the strong volatility and manipulation risk is high right now. So if you're offered 20 to 30 points, it's even more important to get out. Okay, take your profits, or at a minimum, if you do want to have or try to still experience larger stuff, larger moves, maybe you're at that moment in your journey. Not everybody's there when they first start. You got to gradually get up to bigger stuff, because like I said earlier, there's more context that's required for bigger moves. But be satisfied with 20 to 30 points. It will serve you well in times of chaos, because that stuff's offered constantly, especially if volatility is super aggressive. I mean, it's so fruitful, which I hope you guys that have been with me for a while have seen here on YouTube. My private community, I mean, they've seen so many opportunities, but you guys see a lot of stuff too. So both of you guys should be hopefully benefiting. But yeah, so we'll see about what happens with the war and how that affects the U.S. assets. I do think that, like I said, the NASDAQ, the indices overall, I think they're going to probably have a gap lower. One thing that I think is going to be extremely positive for at least the chart of this asset is crude oil futures. That is probably going to have the most insane gap higher. I mean, actually, we'll probably look at that later on in the video, okay? Because we're going to take a look at that. I'm going to incorporate gold and overall silver as well. So let me actually pull that chart up real quick. Because we'll do that after this. So let me see. Sorry, give me 1 second. It's going to be very important that we look at these assets. Oil is called crude oil futures, okay? Which I will pull up if I could find it. So my other playlist, okay. Let's see, where the hell did it go? I already had it right there. Okay. Let's add that up here real quick. We'll look at that in a minute, okay? So we see that we've had a very aggressive run higher. I mean, that's just pretty incredible. We're due for a bearish month. If you see the high here, low, higher high, everything works on higher time frames that we use on the lower time frame. So this here is a bullish breaker. Okay, so the line in the sand from this monthly chart, if we're going to keep this perspective in mind, that the higher time frame's king, bullishness overall, in my opinion, will continue even if there's a retracement as far as the mid portion of the breaker. But it could use all that, and as long as we stay above that last up candle creating this bullish breaker, which if you go to the 2 month, probably have or 3 month quarterly chart, we have a quarterly bullish order block too. So you see those consecutive up candles. We got a quarterly order block here too as well to watch for retracement inside that bullish breaker. So if we go quarterly order block. Okay, so let's go down to the weekly again. So yeah, now we're inside, again, we're inside of this bullish breaker. We're also inside of quarterly bullish order block. So if you take a look at what we have in here, we have that monthly breaker. We also have the fair value gap in here for the currencies, right, for the GBP. We have this monthly inversion fair value gap that we're trading through and we're respecting for the most part at the moment. And prices obviously continue to go higher, right? Market maker buy model, which I outlined for this asset. We've been continuously focused on that, and it obviously delivered beautifully because guess what? We were correct again. So in terms of what price is doing here, again, we have this bullish breaker on the monthly chart. We have the quarterly bullish order block that I just showed you guys how I identified. So that's going to be important. And we're trading back into it, into two levels that should be highly reactive. The open of the quarterly bullish order block, and we also have the fair value gap and then the monthly bullish breaker with a monthly fair value gap in here. So you can imagine that if price was to violate and break through this low down here, that could potentially be impactful to maybe turn price lower if it was to turn around. For now, again, is there anything based on what I've just mentioned that supports bearishness aside from the possibility that we think that price is too high up, right? It may need to retrace, or just an assumption. Is there anything outside of personal opinions and assumptions that tell us that this is going to end up going lower versus going higher continuously? No. It may look like prices, it took buy side, and it may look to retrace, right? That doesn't mean that we're going to be bearish overall. I do think, again, that if we break down through this wick here, the largest one, get the midpoint of that, we got a fair value gap, and we got this swing low. If we close down below this, we got to see how price responds to this fair value gap. See if it uses it as an inversion. If that's the case, then this bullish breaker may get traded deeper into, and then we may look to target the lows down here. Notice this wick here, right? Price had this large wick. The retracement didn't have to do much because that large wick created a balanced price range. When it overlaps a fair value gap, a lot of times that's how a fair value gap can get left as well. And that's part of the why behind why some fair value gaps get left available. Not only is that in line and that logic in place, but we also have the market maker buy model. We were inside of a second stage distribution bullish up here, which resulted in a fast move, which is characteristic of a second stage distribution delivery. It's a fast-paced move, not spending too much time somewhere. Okay. So yeah, again, this is continuing, in my opinion, to go higher. We have relative equal highs up here that are very obvious. And what could we use to pair, in terms of discount arrays, to pair up a run potentially blowing out the rest of the highs, right? Well, if it's going to continue to go up there, we've now retraced into logical discount arrays. And if you take the low to high, I don't think we quite made it to a discount. I guess we did right to it, exactly to equilibrium. Must be random, right? But that delivery is still supporting buy-side delivery. Okay, so we're still inside of this monthly fair value gap. We're still inside this bullish breaker on the monthly, and we also got the quarterly bullish order block. And then we drop down to the weekly like we have, and now we can get further context within those larger time frames. Okay, so all those larger time frame levels, specifically here and the high and the midpoint of the monthly breaker, we can also see that there's many overlapping PD arrays that support, for the moment, price going higher. That gets potentially turned off depending on how price would retrade through this fair value gap. If it was to retrade through this and show little to no effort to want to go higher still, then obviously we could then look to maybe target this candle's low. That's a weekly low. And then, of course, the fair value gap down here, and specifically the swing low that's overlapped that, because this should be a balanced price range in here. As we saw, it's treated as such. This being a market maker buy model, if we're going to continue to go higher, something that people don't realize, well, most people don't know because they just don't know. They don't know what the hell they're talking about. When a market maker buy model or sell model is completed, regardless of what time frame, that delivery that you just witnessed should act as a balanced price range. Because what happened? Sell side's delivered for the sell side of the market makers, a buy model. Buy side was delivered, overlapping fair value gaps, overlapping all the sell side delivery. So both sides have been delivered. And if it's going to continue to go higher, that should remain intact. Okay? If we're going to continue to support buy side, right? But if it starts to trade back into it, that is a whole lot less bullish in this case than we would imagine if we're going to assume that it's going to continue to go higher. So, that set aside from the details that we've just talked about in here. Okay. Remember order blocks, breakers that are created. If they're valid, they should be acting as balanced price ranges. That's why they're dynamic. That's why they don't trade into them too deeply, and they respect the midpoints, right? So we're going to see that logic should come into play here because this is a 3-month bullish order block. Plus we have a monthly breaker that finished off creating a market maker buy model on the weekly and daily chart. All of that's obviously working within these larger perspectives of monthly and quarterly. But yeah, so that stuff on the back end makes us disregard any interest to want to go down here until proven otherwise, using our invalidation principles. Right? So I hope you guys realize what I've been sharing with you guys the last couple of months. Like just what I just mentioned here helps you totally not look at sell side until our process is engaged for validation and invalidation. And again, if this holds these levels, what is the reason to try to push shorts or even think about it in your head that you want to take a short? There's no reason. And when you see this play out, or when you see this get traded through and turn around, what we're talking about here, if you haven't seen things this way, from balanced price ranges, higher time frame analysis, different levels overlapping, and just overall delivery that we've talked about, these different tactics are going to make a whole lot more sense and be more meaningful if they don't mean much currently. Like if this is your first video watching me, you're lost, and that's totally normal. And we're beyond some basics at this point. I do kind of push back to basics in many cases. Lots of the stuff is very repetitive, so you'll catch on eventually. And then of course I'm always here to answer questions if you need it, or send you resources or whatever videos I think you should start off with. But yeah, so all this stuff considered based on the analysis and things I've just pointed out to you, we have a pretty strong inclination, unless we're proven otherwise by price trading through this fair value gap and using it as an inversion to go lower. We have a lot of things on the back end supporting us going higher here from this weekly time frame. Okay, so that's going to be the opinion unless proven otherwise. Very simple. Do you see 1,000 different PD arrays on the chart here? Do you see 1,000 different things to pay attention to? No, it's all the most recent stuff that's important right now. I could even remove that because we already used that and framed a move off of that. I talked about that for the last couple weeks. As it was printing, as it was delivering through the high. Go back and look at the videos we talked about. We've talked about this whole move lower, whole move higher. Right? We've been in line with all of this. Okay? Specifically for this year, right, the whole run higher. But last year, for those of you that have been with me since last year, we've been able to gauge this entire thing and talk about this as well. From this move here declining, I pointed out a move in there, right? I pointed out a move in here off of the wick being respected, right? So again, just look at the date and go back and watch a video that's close to that time. You'll see it. I don't just talk, right? It's backed up by going live every single week and pretty much every day except Saturdays for the most part in my private community, So it's not just me talking, it's being proven to you. So hopefully you guys see that, right? I know most of you guys that are on right now do see that. But those that watch the replay, hopefully the gears start to turn in terms of what we do here and what you're witnessing, the velocity and value. Chris, it's insane what's lining up, and you can see what's about to happen. Yeah, it's very obvious after a while. And when it's not obvious, like, for example, in the bonds and yields, that's very obvious too, right? Like, okay, I need more information. When it's there, though, when things that are worthwhile are there, it's very obvious. obviously for time, and it takes some time to make it obvious, and experience, which is part of the value you guys get here. You get to borrow mine. And students like Tony have been seeing the value of that, and Chowezi as well, and many others. But yeah, we're going to see what happens. And again, if what we're looking for, like this going higher, doesn't play out, Tony, the beautiful thing, and everybody that's watching, the beautiful thing is, it's also going to be obvious to go the other way, right? So we have price cornered. It's not going to be able to get away from us. And when there's something to engage, we're going to be ready for it, which the last, hopefully year, for those that have been with me for the whole year so far, have been able to witness. And you don't have to just hear me talk. I don't like to hear myself talk. I don't say things for no reason. I don't point out specific tactics and areas in price and different ways of doing things and processes just because I want to just sound smart. I show what's happening and what you need to wait for, what invalidates, what validates. And the biggest thing that all this stuff encapsulates is your ability to have clarity and build trust. Start to build things that help you trust yourself when you're trying to determine what direction price is going to go and why you should trust it or why not, right? Why, or how to be flexible. What's going to create that flexibility in you and the clarity. Because again, that is the goal of this channel. A lot of people come and see someone trading live and they think signals. I make it very clear what my intentions are. Turn traders from confusion to clarity in the amazing world of smart money. AKA ICT concepts. It's an interchangeable term for those that may not know, right? And from the testimonials and things that people like Tony and Chowezi have been telling me, and many others, I've been seeing that I've been thankfully doing a pretty decent job of getting the point across and achieving those objectives to helping you guys gain clarity. Because again, me taking entries is going to be different than you. I'm not going to be able to be there for you every 25 seconds to take a trade and help you manage the trade. I'm giving you guys many different tactics and perspectives and mindset and different things that will help you thrive for years to come if you're going to be a trader for the rest of your life. And maybe some things will be more important later down the line, which it's going to be the case. It was for me too. It took time for me to value certain things. But hopefully the things that I can continuously repeat, continuously point out in these Sunday calls when it comes to bias and narrative, how to gauge that and how to become clear as far as what it is you're doing, what you're looking for, how to trust things, how to be flexible, how to manage your risk, the importance of those things, targeting even with the liquidity list that I give out every week. I hope that all these elements are building you into having clarity. Because again, that's the goal. I'm not here to put you in trades. Because I know that once you get clarity, once you understand the model, once you have different principles unlocked that I teach and share and obviously got from ICT, some of the stuff gets lost in the sauce. But hopefully the stuff that is presented here can help you get closer to your goal. Because once you have clarity and trust, the entry tactics are very personal. So you'll figure out when you feel the most comfortable, what session, what model, how much you want to target, which I have a baseline of 20 to 30 points, which ICT himself has talked about, both for free and in the private community charter group. He mentioned that tremendously. For those that are just trying to reach profitability in any capacity, let alone massive job quitting, life changing profitability. So yeah. And again, a lot of the principles we talk about, the processes and all that, that's going to open up the door for you to be able to trust the fact that you can become full-time at some point. Because if a lot of these elements that we talk about are not in place in your trading, you're not going to be able to be full-time. If you can't manage risk, if you can't just take 1 to 2 trades and be done, if you don't have a consistent process that's reliable that you could trust, if you don't have a process in gaining clarity and trusting yourself as a trader, even if you hit profitability by luck or some outside reason, you're going to be stressed out, and you might as well just keep a job because you probably won't live that long because you're going to be so stressed out. Trading is going to burn you out so badly. It's going to just be a miserable experience. And thankfully, the stuff that we do, the things that I've learned, has helped that not be the case for anybody that wants to be a full-time trader, as long as you follow the rules and implement the processes that we talk about. And some processes may be a little different than mine, but the base structure of it, like what should be included, which I highlight in the 10 subjects I have highlighted in the trading plan development section in both my private group and in the free Discord. It's like a template. If you have to have a process and answer for each of those things, because if you don't, you're going to be overly stressed, and stress can lead to problems. If you're unorganized and you can't have an answer to certain things, like you can't describe your process to someone that knows, let alone someone that doesn't understand, it's going to be very hard for you to stay consistent, and you're going to be willy-nilly winging it all the time, and birds get shot out the sky, okay, and you don't want to be shot out the sky as a trader when you eventually get to where you're trying to go. So yeah, and yeah, Chalezi, we got it cornered, and I hope you understand how we have it cornered and why, behind that statement, because that's what's more important. Not just because I'm saying it, not just because of me. I hope that you have an understanding. Matter of fact, I would like for you to DM me on Instagram and or wherever, Discord or wherever you want to send it. Explain to me from your perspective how you think we have it cornered. What things are providing you the confidence to say that we have it cornered? Just aside from me saying things, because I don't matter, when it comes to you guys personally. Okay, what matters is you being able to understand this, and I just want to. I'm just curious, right? And if all you guys that are on the call feel that way too, that we have it cornered, not just because I say it, but you deep down feel that we have it cornered, I want you to explain why. It doesn't have to be overly complex, because hopefully the stuff I've talked about today is not overly complex. You guys could share it here in the chat, or share it to me privately if that's something you feel more comfortable about. Okay, so I'm definitely curious to that for those of you that feel the same way. But for the record, yeah, we definitely have this cornered. We have all guns pointed right at the head of whatever it is they're trying to do. So I actually have Instagram. I believe I have a link to my Instagram in my YouTube channel. If I don't, let me see. Sorry about that if I don't have it. My Instagram, though, is WMG Trading. You just search it up just like that. Do not spell it outside of WMG Trading. No periods, no dashes, no spaces, no nothing. At least for Instagram. I think it's even the same way for Discord as well. If anyone hits you guys up, I've had this brought to my attention lately. There's been people trying to steal my name and make fake accounts and reach out to my students, the people that are in my community, telling them that I'll manage their funds and do all this nonsense, which I will never do. I only manage my money, and then I teach you how to do it yourself, whether you get to that point or not, right? There's obviously no guarantees in the same financial advice. But yeah, be aware of the fake accounts. If it doesn't come straight from me, with WMG Trading, no spaces or special characters or anything weird, on every single platform, if it's not coming from that type of handle, whether it's on X, whether it's on any social media that I'm on, even TikTok. I rarely post on TikTok, which may be a bad decision on my part. But if it doesn't have just normal WMG Trading with no special characters, it's a scammer. And if they ask you for anything outside of you potentially being interested in my apprenticeship, even that I won't ask you. I'm not going to try to tell people. I don't want everybody to join. I only want certain people that have a certain mindset to join. So I will never reach out to you and tell you, join this, join that. I have a free Discord, and I talk about all the stuff I have here. So I don't want my people getting hurt, because I really care about you guys and appreciate you. And I don't want anybody to get hurt, because we're trying to succeed. Because there's a bunch of scumbags trying to hurt people. And every time someone gets even the slightest bit of success, and starts getting a little bit of notoriety, they start trying to weaponize that good name on the people that are most valuable to that creator, that mentor, that business owner, and it's unfortunate. So the best way to combat that is to have my audience educated on what to look out for. And you guys are fully aware that there's scammers on every corner of the internet. There's fake accounts for every celebrity, every person that has a name, like including ICT. So you just gotta be careful, and don't be fooled. And if you ever have a question, hit me up directly. If you ever get hit up, that's how I've been able to know about this stuff, is because my students reach out to me. So let me know if you guys ever see any fake accounts and stuff, so we could report it. I could put them on blast and get them the hell away, because they're a bunch of scumbags. But yeah, anyway, with that being said, Freddie, definitely just search WMG Trading on Instagram. I'll check later if I don't have a link here in my YouTube description. Okay. But yeah, so I hope everything so far has made sense for the currencies. So for the GBP, that's what I'm looking for. Those are my levels of validation to continue to support buy side, or when I'm going to end up being flexible, depending on how it trades within this fair value gap, if it breaks through it or not. And then, of course, when we look at the euro, first thing that stands out to me is this huge wick that overlaps that big candle, right? So like I have labeled here, the wick midpoint here is going to be very important to me to want to watch. We have blown out one buy side liquidity pool here while the GBP has left the high. So we'll see how price wants to behave around those levels for both the GBP and the euro. Again, we're due for a pretty strong retracement. We've had some. Again, notice this wick here, similar to the wick over here. How price came down, respected the wick midpoint. Because it respected that, this was just a retracement to a discount, right? Looks familiar, right? Low to high. Came right down to a discount. Optimal trade entry level, which is in line with that wick midpoint, and a quarterly inversion fair value gap. And the price ended up getting back above this weekly fair value gap. So this phenomenon here, this behavior, is what I want to see for this asset here, and I think this one too. Yeah, we got the volume imbalance here. If it trades through that, or if it trades through this, it's going to have a very similar behavior as, to this. If we're going to continue going higher, this is how I want to see it treated, the fair value gaps. If it's going to trade lower, I want to see this take place, but to the opposite, right? Just like break through it, right? So this is the type of behavior you want to be on the lookout for as we're monitoring some of these fair value gaps. All right, so again, that's my opinion here. We'll see what happens. We got the 2 week, 3 week. We got a 3 week bullish order block. That's also the large up wick. So again, that should be able to act as a balanced price range. So if it trades into that, we want to see it have very strong response if we're going to continue to trust buy side or use these levels as significant launching points for price to go higher. Okay, so yeah, with that being said, I hope all that makes sense. That's essentially all I'm going to really be looking at. And yeah, of course, we have these relative equal highs up here too. We have that second layer up here that creates equal highs. This is also the previous week's high as well. So previous week's high, previous week's low within the candles here. And yeah, so we'll see if we can continue to march higher until proven otherwise, right? What proves us otherwise? Price breaking through these levels I just mentioned. All right, so with that being said, let's move on to gold. Or actually, let's do DXY first. All right, so I mean, it's just been a beautiful run lower. We've been able to, again, call all of this. If you don't believe, or if you're new, and I know a lot of people just talk and they're actually full of shit. But if you want to see me calling this stuff out and being well ahead of time, aside from what my students say, like Tony, Choezi, that have been here for a decent amount of time, and multiple others, you could just simply go back, from here to here, right? From this moment in time, from October of last year, you could even go, I don't think I was too aggressive on live streaming before this time, but if you just go from this moment up till now and go review, if you're a new listener, you'll see I called the entire move higher. I targeted these equal highs. I targeted this fair value gap. I watched how price broke down below this low. I called this order block to hold. It held up and delivered lower. I continued to target sell side as a market maker sell model, and it was just spectacular. Each retracement in here going higher created a market maker sell model, mini market maker sell model inside this larger weekly market maker sell model framework, which is part of the down and dirty logic, like foundational rooted logic that kept me pressing into delivering lower for the DXY. Again, you can go watch all the evidence I have. It's blatantly obvious. It's a lot more helpful, especially with me going live every single day in my private community, and then how much I've been live this year on YouTube. It's extremely helpful to see for trust building, for me as like a person to watch and spend your time with. I don't look to waste nobody's time. If you're here, you're not here to waste your time. You're here to learn. You're not here to hear me talk about stupid shit, okay, and trying to sell you a dream. You're here to get down and dirty with what's going to help you be successful, or at least work towards being successful. And that's everything that I focus on, from mindset to technicals. So again, if you want to try to validate, you can go on my Instagram, look at my testimonials, the results, or you can also just go back and look at the live calls I've done, right? And you'll quickly be able to see, and then I'm always open for questions as well, like I've mentioned before. So yeah. So in terms of DXY, what we're looking at currently, if we move to the monthly chart, we see that there's this fair value gap that's been hit. If we move to the quarterly chart, I've labeled this quarterly fair value gap down here when we were all the way up here, right? I mentioned this fair value gap as well from the 1 month perspective. Price came through it. This low, high, lower low created a bearish breaker, which is another thing that I pointed out and we've been using to trust price going lower. That being delivered put my attention to the quarterly fair value gap I just highlighted for you, which again, it's something you can perfectly verify if you just go back to before price took out this low, and then when it took out that low, you could see that we've been in line with everything, like every single week and every day. Okay, I've called bias and narrative like ridiculously, and I've proven it, so I can say it, and I have my students that are doing very well too. But yeah, the logic to get down into there, again, it's rooted from the higher time frame. Okay, it started from the market maker sell model being delivered, blowing through the low, classifying the breaker down here and the monthly inversion fair value gap as a potential resistance level, and then prices just continued to rampage to the quarterly fair value gap. Again, with all this stuff happening, we're going to have to really wait and see what price is going to do overall. Bearish narrative is still intact unless we're proven otherwise by multiple levels being violated to the upside. We got this wick in here. It's kind of traded pretty strongly through it. We are again at a higher time frame quarterly PD array. It's a higher time frame level, so we may see a dramatic move higher. If we see the currencies decline, if we see the indices decline, we may see this have a pretty strong bounce higher to look for a bit of buy side. I won't be bullish on the DXY overall entirely until I see this high violated. That's a little far away, you may think. But again, I don't change my narrative very often because look what can happen. It could go bullish for weeks and then all of a sudden still stay intact as long as the PD arrays above price are still intact. I said this up here was my line in the sand for bearishness when price was trading into the levels over here. I said this fair value gap, the wick here, and this high are going to be the impact levels that are going to support price continuing to go lower if all that stuff stays intact, depending on how it delivers within those levels. And obviously, even weeks on end that went against us didn't change my conviction to be bearish. And that served us well as we navigated all the different time frames, all the different weeks up until this point. So again, we're going to continue to support that. So this example alone tells you why it would be eventful and advantageous for you to think about things in this way. And it just requires patience. And it's just further proof that bias can change on a day-to-day basis, sometimes week-to-week basis. Narrative does not change unless significant structure is violated. So this is a beautiful example of that perspective being so important. Okay, so keep that in mind. Let me fix it real quick. It's kind of crooked. But yeah, so write that in your notebook, right? Keep that in mind if you haven't viewed things that way, because it's very important. It's like a pillar in my ability to be a trader the way I am and be accurate. It's because I think about things this way. It took me 2 years to think this way. Okay, hopefully it doesn't take you that long, because we have to break habits when we try to change certain things about our performance in trading, because it's directly related to you as a person. So changing habits in your real life is extremely similar to how you need to change habits in trading. 97,591. Ninety-seven 591. Set boy, it's going to be a shit show. Yeah, we'll see. We'll see what's going to happen here. Again, we got to keep in mind that we're inside of this quarterly fair value gap, which has now been delivered while we enter a new quarter. So think quarterly shift, think power 3. We've been extremely bearish. I wouldn't be surprised if it does skyrocket. But there's going to be a gap of some kind today, so you got to go in with a very flexible mindset. We're not going to go in demanding anything from any market. We're going to have to wait till some of the stuff we talk about today unfolds. Okay, so we're in pretty solid consolidation. We've already swept out sell side. We've hit a quarterly fair value gap, and price is now rejected back above that quarterly fair value gap and below, or back above the quarterly low that I have outlined here as well. So we're going to have to see what price's behavior is going to be here. We have the big candle in here. We have overlapping candles on this side. So again, if we were to bounce from this level and use these levels as rejection, it may look to want to trade a bit higher up into here. And if it does choose to prove to us that it wants to do that, we have previous week's highs up here. Each of these gray little zones between each gray line or gray segment in price, that's a new week. So we could see weekly high, weekly low, weekly low. Having an indicator like this that outlines Sundays is very, very helpful, by the way, for you to just easily figure out where the weekly ranges are at, where the weekly highs and lows are at, which I talk about all the time. It's one of my favorite targets, because it's weekly candles. And if a new weekly candle is going to break outside of another weekly candle, the previous weekly candles, high and low, depending on which side it goes, is going to be targeted. Same logic is true for daily candles. Same logic is true for 4-hour candles, so on and so forth. Right? Like, this is a daily chart. If this daily candle, this new one that prints, is going to go higher, the first target it's going to reach through is either the daily high, or the previous daily high here, which is Friday's high, which is important on Monday's trading, or it's going to target Friday's low if it wants to go lower. If it wants to target the low down here, maybe that's our target for the week. We still can't disregard the current candles that are closer than this, because those are filled with liquidity. And if you go to the lower time frame, those can be used to set up moves every single day. That's why the list of liquidity pools I give you is so impactful. If you haven't screenshotted that or wrote that down or put it somewhere in your journal or put it in front of you every single week, every day, look at it. And every time you study, highlight those levels. If you haven't done those things, you need to do it today. This is your big flashing light to please go do that because it'll make navigation easier. Because remember, clarity is the target for me as the mentor to you, both in my private community and then here on YouTube. Clarity. And knowing what liquidity pools are important every single day that could present you with opportunity every day or a framework every day, I mean, that's a pretty strong clarity tool, right? Aside from everything else, right? So yeah, again, we're going to wait and see what the war impact's going to be. Again, we got these levels in here, and we'll see. It may gap higher, it may gap lower. Nobody on the face of the earth has any idea what this is going to do. And of course, all the chaotic, crazy things that take place happen on weekends. Lots of disasters. Every single event that took place, pretty much for the most part, that was a catastrophe that hurt somebody, that like a war started, or anything that's taken place. Go back and look at what day specifically it started. Maybe not back in the 50s, but recent events. Go look and see what they do, the timing behind things, both wars, even the stuff that happened in Israel. The October 7th thing. It happened on a weekend. It's very weird. It's a very weird correlation. Things never happen during the week, at least in recent memory or recent events. It always happens on the weekend. And as a result, when the market opens, all that stuff is going to be priced in. We're also a week after a quarterly adjustment from one quarter to the next. So remember, week before, week of, week after, the quarterly switch is generally a harder time to trade. You can kind of see, like, week before, week of, or week before, week of. I mean, the weeks leading up is kind of messy too. And then, of course, the week after is coming, which we're going to see, what takes place as a result. Right? So that's a moment in time where you're going to have to just be cautious. Risk is elevated around those times. So when to trade, when not to trade. If you don't have a category that states that, so you can always post these things that I talk about, or that you find ICT talking about in terms of when to trade, I highly suggest you make a tab in your journal that specifically talks about or labels those times of the year or those moments in price, the conditions, and then any detail that you hear that's talked about, those specific elements, right? So yeah, again, we're going to have to wait and see. We're still bearish overall. Go to the weekly chart. If the lower time frame is confusing, daily chart compared to the monthly and weekly is still a lower time frame, right? So if the daily doesn't make sense, go to the weekly. If the weekly doesn't make sense, go to the monthly. And if you can't find something there, then it's just, you just obviously need to wait for more information, right? But for the most part, we're still bearish until, again, we're proven otherwise and price displaces pretty aggressively through these levels and then eventually gets up above here. Similar to this delivery, my line in the sand was this high. I preferred to see it not break through this, okay? And of course, it hit right to that level when I mentioned it, and then of course declined as a result, which we took part in terms of the indices, right? So similar scenario, if we go from this high to that low, you get equilibrium. We have all these new week opening gaps that are in here. That's what all these lines are. These are all new week opening gaps. So these are all levels that are going to hold price, right? And if they start getting violated, that's multiple new week opening gaps plus, this I believe is a bearish order block right here. Okay, so we can outline that too. So weekly bearish order block. And then we have this large wick. As you guys know, I talk about wicks all the time. They're very helpful for order flow gauging and mapping. So we got the midpoint here too. I'm actually going to keep those levels up, just drag it out, because that is going to be helpful. And you can notice how we're trading right into the midpoint, right? Okay, so as prices are tracing, notice where it closed. Isn't it ironic that last week's close for the DXY was right directly at the price level that lines up with the wick midpoint, I mean, it's pretty amazing. Okay, it just shows you the importance of the wicks. You know, the wick here led to the move lower, right? So the wicks are very important when gauging and trying to read order flow, whether it's going lower, right? You're watching down wicks or up wicks that get traded into. You're watching those always act as some type of resistance. Or, you know, if it's going higher, you know, and they trade down into the up wicks or down wicks that are large overlapping candles, you know, they should act as support and continue to support you going higher alongside order blocks and fair value gaps being respected too. And then, of course, intermarket relationships is helpful as well in that process. So those are ways that you read order flow and continue to think about more positive things as you're managing a trade or managing a narrative. Okay, because if you're in a trade and you're thinking, oh, I'm going to get stopped out, you're going to get stopped out. Or you're going to exit early because your mindset's on the wrong things. But if you start thinking about some of the stuff that I just mentioned, right? Think about if you enter a trade, is price supporting what I'm saying? Are order blocks being held in the direction of my trade? Are fair value gaps supporting it? Are wicks delivering the way I want to see them deliver? Right? If you have a yes to all those questions, then what is there to worry about? Why think about your stop being taken? You place your stop, you leave it alone. Okay, leave it there. Submit to the fact that you're not going to be perfect and you will take losses, but that will not be an end to your career. You know, think about more positive stuff. What supports my idea versus what's going against me, and what is, or if I'm going to be stopped out. Just that change in perspective is very helpful when managing trades. Okay, just wanted to re-highlight that. But again, so these are the levels I'm watching for the DXY. Again, very self-explanatory. We got the monthly inversion fair value gap. We're going to watch how that's respected. We got this large wick to the downside. We want to see if we could stay below the midpoint of that. If we trade up into, you know, the previous week's high up here, 2 weeks, right? There's two of them. So if we trade up into that, we still have this wick to watch as a potential line in the sand. So because if we were to blast through that, we may start to see some evidence that it wants to go higher, because then this will create a bullish order block here too. Right? And then the only way that I'd look to short again, or look for DXY to go lower if we do get up into these levels, is if we start to see displacement again, potentially even disrespecting the bullish order block sitting here if it gets above that. Because it may see a change in the state of delivery at a higher time frame fair value gap from a quarterly basis. We may see a start of a quarterly move that goes higher if this holds, right? But if it, again, gets disrespected to the downside, then that is, if it trades up and comes back and disrespects this level, that would be the time when I would try to get back in line with my interest for DXY to go lower. Otherwise, if these levels up here get violated like nothing, say it has a huge displacement violating the wick here, then my target would be up here. If we target up here and it fulfills this high, what the hell is it, a monthly low? But if we get up there and violate that, then that would change my overall perspective, right? We may look to see price continue to march through the buy side and change the narrative off of the quarterly SMT here at this fair value gap, and then the displacement that then gets above the high up here, which would be a shift in market structure on this weekly chart. Because remember, swing highs are shifts in market structure. But this, given the fact that it's a quarter, if we see price get up above that on the basis of what we've talked about at the time that we're trading within, that may be a significant area to gauge a quarterly shift. So yeah, that's my overall opinion and different observations I have going into this week for the DXY. And with that being said, let's move on to the gold chart. What a mess. What a rampage we've been on for gold. It's pretty fascinating. So yeah, we got, see all the chaos that's happened. See what that's done to oil prices. High oil prices means higher gas prices at the pump, unfortunately. Oh, and isn't it ironic that there's relative equal highs up there with the fair value gap? Isn't it ironic? Same old, same old. Same shit, different asset. Right? So isn't this lovely? Right? It's all the same. Okay, so I will assume for crude oil that we're going to continue to go higher. I'm going to assume for gold that we're going to continue to go higher. We got some levels in here. This down candle. We got the wick here, big wick here. It hasn't really broke through this wick, so I'm not necessarily going to use that one. But I am going to be thinking about this continuing to want to go higher here. We've got an order block down here. Notice how that was used, and price continued to deliver higher. Notice the order block in the wick here. Look at the closure related to this order block in the wick. Closed well above the midpoint in a time where turmoil is going crazy, right? Overall, hard assets are appreciating in value as inflation declines, as instability happens. It's always a flight to quality, always, or a flight to safety is gold. And with stuff happening in the Middle East, obviously that's going to impact gold prices. Oil prices. Commodities generally run in sync with the indices. Okay, let me, or specific commodities like gold and, not necessarily oil. Oil and gold are sometimes a bit shaky because they're heavily impacted by world events, gold especially. And then obviously if there's news for the overall oil, right, for Middle East or whatever, that's going to impact oil prices. Supply and demand factors are very much a real thing when it comes to commodities like gold, silver, wheat, corn, oil, right? Platinum, titanium, I said silver, aluminum, right? You could trade that too. Any of the other actual commodities, water, okay? Some people trade water futures. How insane. Okay? Like this is wild. They've commoditized water. Like it's wild, right? So yeah, it's a fascinating world. But supply and demand when it comes to commodities is actually a thing. So, and disasters to happen related to like the Middle East, or disasters to happen economically for gold. These are some of the things that impact these markets. But you're still going in looking for the same things. You're still going in looking for the same timing elements. Okay? There's still kill zones, still macros, still New York session, London session, Asia session, still central big dealers range for the most part. Commodities, it does very much the same thing. Power 3 is still available. Market maker buy and sell models are still available. Seems like that may be what oil is delivering right now, a market maker buy model. Go to the 8-hour. Let's see if we could pull out some possible structural elements. I guess you can make the argument. See this accumulation in here? Little accumulation in here. You zoom out a little bit. See the price accumulated also in that area. That's supportive of market maker buy model scenario. Whatever happens on the left side should happen on the right side if it's going to deliver in that capacity. And when you see that happen, that's a supercharged opinion. As you could see, the delivery is just amazing. Not only here, but in the other assets too. Look at all this liquidity that's built up above gold. Equal highs for days. Notice the overlapping fair value gaps here, right? That led to a balanced price range like I talked about, like I always talk about these days. Returned into it. Upper portion of that fair value gap was respected. Why? There's a wick that traded through the upper portion. Kind of left that available. But we've also balanced it in terms of upside, downside. And now we've left equal highs in a bullish trend with a bunch of chaos happening. And gold's impacted by that. So I'm assuming that this is probably going to continue going higher, possibly targeting the buy side up here, equal highs. But before that takes place, we may see price look to target some of the previous day's highs. So this is a previous day's high. This is a previous day's high. Right? So this is a fair value gap. This is an overlapping fair value gap, similar to what happened over here that led to this retracement. So let's see, if it was to break through this fair value gap and get back below it, then my attention would then go to further sell side. But if it stays like this, because it's in a higher time frame bullish narrative, I will continue to justify this fair value gap overlapping this one, the shift in market structure inside the bullish narrative with all the stuff that supports buy side geopolitically. I will continue to support this one and to go higher, and eventually maybe even get up here to seek previous week's high up here. All right, so we have that as a previous week's high, but if it was to displace and try to go lower, we have previous week's low here. Okay, and then we also have another previous week's low here as well. So this is some down and dirty liquidity mapping using previous week's highs and lows, previous day's highs and lows, and just overall, and then slipping and balance price range idea to map the narrative. Okay. So yeah, some of my thoughts for gold. I think it's still going to go higher. Use some of the ideas. If you trade gold, use some of the ideas that I've just mentioned here. Okay. And definitely let me know in the comments if you do, watch a replay and you've made it this far and you see me talking about gold and oil and commodities. Let me know if this is something that you want me to incorporate in our weekly analysis. If a lot of you guys trade these assets, then I will be glad to incorporate it. Otherwise I'll just continue to periodically talk about it whenever it's important, or things change, or there's some type of point I want to make with it, or just further justification for something, right? So yeah. So yeah, I want you guys to watch and see how all this plays out. Right? We have a fair value gap up here. Let's see if that can turn to an inversion. We have relative equal highs up here. Previous week's high as well. Two previous week's highs. One from previous week, from last week, and then last week. And then of course we got previous week's low. And then all within that range, we have previous day's highs and lows too. So previous day's low here was taken on Friday. Friday's trading didn't do anything. Man, this is gonna, I think it's gonna gap higher, honestly. Yeah, Chowezi, so notice, does anything change? Does any tactics change? It's pretty much all the same. It's one of the assets that's in the list of risk on, risk off overall analysis. It's just it's one element, but it's something that you don't need every single element. Just you want to work with stuff that you potentially like and use. I don't really have a lot of students that trade gold. I know I have some students on YouTube though that mention it to me all the time. But commodities being bullish, stocks being bullish, currencies being bullish is supported by bond yields being bearish, and bearish DXY, but also bullish bonds. Okay, T-bond and T-note are the same. I made this a while back, so just think about T-bond and T-note as the same word. It's the same thing. Oh wow, I didn't know that. I didn't know that, Tony. Gold is your favorite. Gold is your favorite asset. It's not a pair. Well, the CFD, I guess, is, right? Because it has, gold futures is pretty much the same thing, but it's a future, right? It's a futures contract, right? So it's pretty much the same. Pairs like I guess gold and I don't know actually. I'm not really sure. Actually, is it a pair or is it just an asset? If it's a futures contract, it's an asset. But futures is also it goes with the US dollar too, right? Or there's a relationship there. So I'm not entirely sure what the whole dynamic is behind those different products. but because that's what currency pairs are, that's what futures are, that's what all these things are. They are they're overall products, right? So yeah. So yeah, we'll see what it wants to do here. This is what I'm going to assume should be the case, though. This plus this as well. You can also look at it like this. Okay, so this overlapping fair value gap in itself should be something that creates a balanced price range. But if we get above this high up here, if this consecutive down movement here is going to be a bullish order block, which that's, I'm assuming that's what it is right here. If it gets above that, it should end up being a balanced price range in itself. So we got balanced price range navigation and range navigation within the range, but then using the overall range too that could potentially justify the price delivery, in this case to the buy side. Same principles apply for shorts as well. You just flip it over, So yeah, I hope all this stuff has made sense. It's very powerful stuff, but that's my assumption for gold and crude oil. I think that we are going to see price go higher. Again, my liquidity of interest is obviously previous week's highs and lows, previous day's highs and lows, session highs and lows, and we will see how price is going to react to the war, keeping those levels in mind, keeping power 3 in mind, keeping all the different things that we talk about in mind. It's all the same stuff, just a different name, different asset, different personality for the asset class. Right, and different influences. But this, if it's going to be bullish, most of the time the condition, if everything is symmetrical, we're going to see currencies run higher too, foreign currencies, and opposed to the U.S. dollar, and stocks like indices. So indices, currencies, commodities, if they're going to go higher, DXY should go lower, and the bond yield should go lower, and bonds, the T-bonds or T-notes should go higher, as I showed in the picture a minute ago. This is why that picture is so important to keep in mind. Risk on, risk off. You want to know the relationships so you can build clarity. Because if you have an assumption for gold to go higher or any other asset like the indices, you want to be able to have other back-end markets supporting that. So because everything's connected, as you guys are aware, that have been with me for a while. But yeah, so I hope this stuff was helpful for those that trade commodities. Again, I'm going to watch what this is going to do. If crude is going to go higher and target the buy side, I would like to see us get above this fair value gap and start to use it as support or a balanced price range as well, and then see price continue to target the previous week's high, and then eventually, like I mentioned earlier, on that higher time frame, we have beautiful relative equal highs on that weekly chart up here, which also has a fair value gap up there. Wait, did I just label that? I think I've had that. Did I have that labeled? I think I already had that labeled. Yeah, I can't remember. Maybe not. But yeah, we'll see what happens. We also, if we get above that high up here for crude, which I do assume is going to take place rapidly, we also have the wick up here to watch for even further targets for price to run higher. Okay, so yeah, with that being said, hopefully that was helpful. Hopefully it's pretty eye-opening to see that everything is pretty much the same. Same thing with crypto. Timing is a little different in crypto, but same price action elements, all the same. Still has power 3. It's 24 hours, so I'm not. Each candle still opens up a new candle, so I'm pretty sure you just use the same timing. I've never really dug too deep into it. So yeah, I mean, even if you just use a default, because I'm not 100% sure. I do hear a lot of ICT traders say that they use the same stuff, so I'll just assume that it's all the same timing elements to futures, right? The New York session, London, daily open, which is called true day open. So we just continue to keep that in mind if you trade crypto. Think about all the things the same way, right? So yeah, that being said, we will take a look at now the main course meal, which is our lovely, reliable, dynamic, amazing asset class we call the indices. So yeah, let's move up to a little bit higher. So notice how we're closing inside this order block plus the fair value gap. So again, we're at a point where, yes, it's delivering the market maker buy model I talked about from all the way down here. Again, for those that may be new, we navigated literally this entire run lower, which you could go back to the start of the year and see I was calling for and navigating, and I gave reasons why, and then justified getting into moves targeting sell side, including this high that ran through the lows. I called out moves that went over 1,600 points this year, which broke my overall record. I was only able to secure one of those larger moves, a bunch of little ones in between, but one large move was over 320 points, which was this move in here, targeting the low, which I shared, right? I pointed out and called the idea well ahead of time from that higher time frame. So for those of you that are swing traders or day traders that navigate like me or want to be like me, or not want to be like me, but want to implement some of the tactics the way that I do, because you see the reliability. You can go back and look at that stuff or just continue to show up. And by default, hopefully it bleeds onto you. Right? So, yeah, the war, all this stuff happening, it's going to keep me reluctant. We're still in consolidation overall. You see that price has a bunch of overlapping candles. When you go to the weekly or the monthly or the daily, and you see price has a lot of this overlapping behavior, that's automatically low probability until we start getting some displacement, proving that levels like this order block, this market maker buy model, are going to continue to want to run higher. Because we could see some insanity that happens in here. We don't know what it's going to do. Okay, we don't know. We really just don't know. I've never traded through a war, so I don't know. You don't know. Most people don't know. But what I do know, in every circumstance, especially if there's something crazy going on, you want to limit your risk. You want to let the market print first for the start of the week. Think of power 3 and let consolidation, manipulation, distribution phase of things take place, especially because we're in consolidation still. Okay, and we want to see if this order block is going to continue to hold price and send this up in terms of a second stage distribution to try to blow up these equal highs. We may see a crazy move because, maybe America's strength is something being looked at because of the war or because of what we did. Maybe that's going to have an impact on the markets, pushing us higher to then, maybe gap all the way up through the highs. That's the craziness we could see. We could see a gap from this level up to these equal highs. I mean, if you go back and look at some of the previous charts from previous years, like decades, there's times when that type of crazy stuff happens. Okay, so we just don't know. So because of the fact that we don't know, and things are already based on probabilities as it is, we don't want to increase the risk exposure by going in on right when the open happens on Sunday today, and then just start throwing trades in, or just executing super early in the week when power 3 is obviously something we think about and use as a fundamental tactic. Right? Tuesday, Wednesday, Thursday will probably be the best week or the best times of the week. This week we do have news, so this may start off with manipulation. Fed chair's speech may happen and set the higher low of the week, depending on what we see as a result of the overall war situation. And then Powell speaks again. Yeah, he speaks a bunch the next couple of days, huh? Keep in mind we are still in a market maker buy model on the indices. We're still interested in seeing price go higher until proven otherwise. What will prove me otherwise? If we close below this order block, well, actually I have the markup framed out. Okay, so we have the daily order block midpoint. Sorry, I labeled that wrong. Okay, so we got the midpoint of the daily order block. Let's go see, is there SMT anywhere? No, so there's no SMT. So we're literally just like hanging out, trying to see what price is going to do outside of this consolidation. So if you take, let's go to the weekly, get the weekly view. It's not really any fractal highs and lows. Let's go to the 3-day. All right, so if we take it from this 3-day low to that high, equilibrium overall for the current range is down here. Let me turn this distracting yellow color off. Okay, so again, we still have a little ways to go. We do have an order block in here that seems like that's what it's reaching for. We're still navigating and dancing around inside the weekly bullish fair value gap, or the weekly fair value gap created within this market maker buy model from this weekly chart. So we have returned into a very deep premium. So again, we're just gonna have to see what excuse me, sorry about that, coughed in the mic, hope I didn't pop your ears. But yeah, so we'll see what happens as a result of this order block. Okay, we'll see how price behaves around that. We also have a wick in here. We also have that bullish order block I mentioned, which is also a weekly bullish order block. I have it outlined here. I've had it outlined. Hopefully that's easy to see. All of the weekly inversion fair value gap from the weekly chart plus the weekly bullish order block. Again, we're going to have to see how that behaves. If it was to close below that and displace, the way that price behaves as a result of delivering back inside this order block, if it was to choose to do so, would determine for me whether price is going to now look to seek sell side, maybe come down and try to clean up some of this imbalance that's down here that wasn't traded within. Okay, we're approaching the 20th day of this new quarter's month. Okay, so when the new quarter's month starts, you place a line at the start of the month that's going to transition to the new quarter, and then you cast out 20, 40, 60 days. And generally after the 20 day, between the 20th day and the 60th day, within the middle somewhere in there, sometimes it's earlier, sometimes it's a little later, but within that range, generally when we go into a new quarter, there's going to be a shift from one direction to the next if there's a significant shift in market structure that takes place, opposed to what has been taking place. So that could very well end up being what we're seeing here. It may shift as a result of the quarterly shift or the quarterly adjustment, plus all the stuff happening with the wars and stuff. That may lead us to a shift in sentiment, because maybe the war's looking at are being looked at as negative, and which could be the case, and then the markets may get spooked by that, and then want to come down and try to purge out some of the sell side, which in my opinion, if it gets down through these levels and reacts to the downside from this order block, I will then look to target this as my overall assumption, right? And then any retracement higher, if that's to be respected, would just be to try to target the sell side until we get to this level, and then I'd have to gauge and analyze what's going to happen around there, right? And then of course, if it declines, we have the daily lows here, weekly lows here. This is a weekly low. This is a weekly low. This one, this is a weekly low. So there's multiple weekly lows from previous weeks that could be targeted on our way to potentially attacking this. So it doesn't have to get down into here if it does look to respect this bearish order block and provides evidence that it may be fruitful to take a short. It would be at half risk, because I wouldn't overall have a change in sentiment until this order block is completely violated, which I guess, yeah. Breaking down to here would kind of turn the overall narrative to bearish, because if you count, we got 1, 2, and then 3 PD arrays on the weekly chart. So yeah, I guess if it is
to want to run down there. Keep in mind the 20, 40, 60-day shift perspective. Beyond 20, within the 20 and 60 days, if there's a shift in market structure, which if we look here, if it displaces through these lows, respects this order block, off the heels of the war and things that are taking place, I guess you could classify that as a shift, unless, of course, it was to trade back through it and violate it. In that case, then we would then seek buy side. Until we see how price is going to deliver here, going through the war announcement, how it behaves within this area, how it respects this or not, that'll obviously determine whether we're going to now try to aim for shorts, or if we're just going to wick through this and then displace or gap higher to then try to maybe come and sweep out some of the buy side up here, previous week's high, this previous week's high here, so on and so forth. Okay, so again, we're in consolidation. We're not going to come in with too heavy of an assumption. We're going to keep in mind all the stuff that we talked about today, all the different levels that we see in here and their importance and what we're going to expect depending on what happens around those levels, and things that are significant, things that are not. Quarterly shift perspective, we're going to try to watch and see what happens there. Something I do want to point out real quick. I'll go to pictures. Okay, so if we take this up here, it's not a be all end all. I know some people freaking hate COT or whatever. Just chill out. Okay, it's not a be all end all. But given all the stuff we just talked about and the possibility or likelihood, the possible likelihood of the war potentially being negative, turning this into a possible quarterly shift to the downside. If we take a look at this chart here, I zoom in, we go specifically to the Dow. Oh snap, whoops. What the hell just happened? Sorry about that. Alright, so yeah, if we take this, scrub on over, oh, it's too much. Okay, so if we look right in here, we see a rapid increase in open interest, while we are seeing a pretty steady, somewhat rapid decline below the last 6 months range using the COT idea. We're below the midpoint of that. It's been excessively dropping lower, meaning that they are potentially offloading their buy positions. That's what this signature shows. Offloading of buy positions, which essentially, in simple terms, let me pull up the Discord so I can show you that too. So offloading their short positions or potential bearish signature, downside COT, rapid increase in open interest. That is an offloading of buy positions. A rapid decrease and a rapid increase, a rapid decrease of open interest and rapid increase getting above the zero line with COT from the last 6 months range or last 6 months data using COT. That is an offloading of short positions, right? That's the reason why this is important. COT, it tells you the positions of smart money, and when you're gauging things the way ICT teaches, it's highly effective because you then start to have an extra confirmation. Like if this was to displace below and start tanking as a result of the analysis we did, but then you have this on the back end, you're not only seeing COT possibly support it, you're also seeing market structure support it, and then potentially intermarket relationships end up supporting it, depending on what the interest rates do and what the DXY decides to do. Mind you, isn't it interesting how this looks like it has a potential to decline, supported by potential COT offloading of buy positions, while at the same time, DXY has a potential likelihood of bouncing from this quarterly fair value gap and going higher, right? So again, all these things are being considered, and we're going to have to see what happens as a result of this transition into a new quarter, plus all the stuff that we've seen in the last 24 hours. Does what I just mentioned make sense? If what I just talked about makes sense in terms of kind of visualizing the forecast of what price could potentially do, and if all that stuff makes sense, to the point that you could put in your notes and watch what happens, and then have it make sense. If that makes sense, please let me know. Hopefully that just made sense, right? What I'm trying to highlight here, essentially, it's like the relationship between all the different assets and how it can support you going into things like the indices, right? Just like the deep back-end knowledge that can be provided into structural framework that can provide clarity for if-then scenarios. And then even if you have like a specific narrative or following, how it can also help you transition from one idea to the next. Does everything I've talked about and explained so far throughout today's call make sense? Because that's pretty much the gist of what we're going to talk about. And now I'll open it up for some questions. There's not much more I wanted to point out here. I think I mentioned pretty much everything. And you guys are aware of the liquidity that I like to target, so I won't spend too much time on describing previous week's highs and lows, days highs and lows, months highs and lows, session highs and lows, Friday's high and low when you go into Monday, thinking of power 3, so on and so forth. So let me know if all this stuff makes sense so far. Damn, I thought the lag was way worse than it is because the YouTube analytics monitor was like way behind. All right, Tony, I'm glad to see that. So every week, just for you because you're special, I will add gold. Maybe even on a daily basis, I'll add gold when we're doing the live calls on Tuesdays. I'm definitely going to be paying attention to crude oil. You might see me take executions in crude oil. I'm still kind of contemplating because I've just been so married to the indices. I think I'm at a point, though, where I can add like maybe one more reliable asset or not, right? I'm still kind of debating, so we'll see. We'll see how it goes. But yeah, we're going to watch some of the commodities and see how, because when crazy stuff happens in the world, commodities are going to be exciting. They have bigger gains than what crypto can do, which is ICT mentioned that. If you trade like futures, like for corn and wheat and gold and silver and oil specifically, because it's massively aggressive when it has news that is related and things are happening in the world. Those things can have massive returns when it comes to how far a move can go. It makes crypto's moves look like an infant. I didn't believe that until I started really digging into it. I thought, oh, ICT, you don't know, you're old, right? But that's just not the case. It's absolutely true. Right. So yeah, I want to leave y'all with something real quick. See if I can go find it as we. Yeah, let me see real quick. I want to go over one more thing. And for those of you that don't know, I'm over here sharing a lot of psychology stuff with my students. We got so much stuff in here. It's just incredible. So much. From long, long ago. 2021. Some very important things that helped me early on. NFP, highly manipulated. ICT, what he said about it. Yes, so where is it? Yeah, looks like I don't have it. So yeah, let me see if I could. I want to show y'all something real quick. If I'll just hang tight for a couple more minutes. If you guys have any questions, let me know in the chat. Again, if you guys get value from what it is that we do here, definitely don't forget to like the video, subscribe to the channel. Anybody that you know that's a trader, let them know about what it is we do here. But I'm gonna show you guys something real quick. I don't know what the hell happened to it. I'm not sure if you guys have seen this yet either. It's something that definitely kept me motivated when I was first starting out. So I want to share it with y'all before we log out. I'm glad that you guys don't have any questions. That's always a good thing, obviously. I mean, I assume that I do a pretty good job of teaching this then, if that's the case, right? There's never any questions. Let me see, do I have it? Oh man. Alright, well, let me see, do I have it like under my previous wallpaper? Damn it. Well, I hate when that happens, but yeah, let me see. Can I? Oh yeah, there it is. Let's see. Can you guys see this right here? Can you read what that says? Oh shoot. Maybe you can, maybe you can't. Hopefully you can. But I put that up as my wallpaper. I didn't know I had it in my saved wallpapers. But the first 4 years, it said, well, if you couldn't see it, it says years, it's from ICT, it says years from now you'll be able to do this and not be moved by emotion too. It simply works precisely. Don't give up, you're doing fine. He said this pretty long while ago. And when I saw that, I was just like, dude, that's got to be something I put on my wallpaper to always remind me. Because there's little things that you got to do as a trader to continuously stay motivated. We are special types of people. Like those of you that are still here with me, while many people tap out, or just don't get an entry or whatever and they leave. Those of you that are here with me this long, all the time, consistently, trading is for you. Not everybody's going to want to sit and spend this much time on this stuff. Not everybody enjoys sitting back, listening to, any type of information about any subject, especially something that's filled with egos like trading. Everybody that, someone could win a week in a row with a bunch of guesses in trading in a demo, and they'll come out and they'll start a course. They'll try to think they're the shit just because of that, knowing deep down inside they don't know what the hell they're doing, But the fact that you guys spend time here, hopefully you guys have been seeing results. I know some of you guys have been voicing it to me. You've been seeing massive results. And it's because you're listening. And it's because, not only because you're listening, but what we do here is universal. A lot of the stuff I talk about is non-negotiable. It's very transferable stuff because obviously I had to teach myself how to do it, like how to understand a lot of these complex ideas ICT talks about. And we overcomplicate as human beings. We look at the market and instantly, when we don't know anything about the market, we think complicated. We think risky because that's just what everybody has been trained to think. While the rich people in the world teach their kids this type of stuff from a very early age before they even get out of high school, sometimes before they get into high school, and that's why they continue to have success down their whole family tree. And, poverty is not something that they even understand anymore, for the most part, so it all has to do with what you implement, what you learn, the people you allow, or the things that you allow into your sphere of influence. If it doesn't serve you, cut it off. If something just doesn't serve you, you gotta cut it off, and you gotta pay attention to the things and spend time around the people that are willing to help you, that and can verify know what they're doing. And I don't recommend spreading yourself too thin in terms of opinions. Because like Tony said, there's a lot of people streaming. There's a lot of so-called ICT students and traders and whatnot. And most of them don't know what they're doing. They know the terminology, and it's easy to fool people in this industry because the stuff is so complex. And you could just simply trade a demo and people don't even do any verification. At a minimum, I always, say if there's someone that you're watching outside of what I'm doing or what ICT teaches and stuff, at a minimum, they should be going live calling the market every single week. I do it every day. They don't have to do it every day, but I do it every single day. ICT has proven he's able to do it every day. And if they can't at least at a minimum do that, because they're worth listening to if they can do that and prove it to you. If they don't at least do that at a minimum, nothing they say matters. Don't even waste your time. And just stick to what you have been able to prove that works. ICT, myself, because I come out and, obviously prove it, or intentionally prove what I'm doing. And the results speak for themselves. And the people that do spend time, like you guys, have been with me for the whole entire day so far, and every other week prior to this, recently. And it'll just start to show. And maybe it doesn't click right away, but it just takes time. Don't let nobody tell you this is impossible. Okay, don't let anybody influence your mindset about whether this can work for you or not. Okay, I don't care what anybody says. You make your own judgment. You make your own judgments about everything, about how you feel about who you're learning from. Experience the things yourself. Okay, don't let nobody on the internet dissuade you from ICT's concepts. If you don't like ICT himself, separate the man from the concepts. Separate it. Were you supposed to love every teacher you had when you were growing up or going to college or whatever? No. You just were there to do something, get information, and leave. You're not going to care later on, especially if you don't like the teacher. But the person has value. Extract the value and go on about your day. Go change your life. That's why we're all here, after all. To have a skill set that we know is more lucrative than any career ever. Gives more time freedom and actual feeling of freedom than any job in the world. Aside from maybe OnlyFans for... Because they don't got to do nothing, yo. Wish I was a girl. No, I'm just playing. If you have any kids, do not let your daughters do that. Just be a trader and make them not work. Because... Anyways, okay. But yeah, don't let nobody dissuade you. All right, keep showing up. I'm grateful for the time you guys spend here. I hope you guys have been getting value. Again, if you guys do get value from the content, spread the word. Make sure you subscribe to the channel. Don't forget to like the video on the way out. And let's just keep trying to impact as many people as we can. We want students that are here to learn And I've noticed that most of the time word of mouth is the best way to get the best students, rather than doing a bunch of ads and stuff like that. But eventually, those that are seeking somebody that's going to help them, that's willing to help them, eventually they'll find the channel. The more that I post, the more that you guys engage, the more that you spread the word. So the ones that are meant to be here will end up being here. And again, I'm grateful for the time you guys graciously give me, just as much as you guys are thankful to me about the time I give. So it's a two-way street. You guys make me a better mentor by the questions you ask. And, being able to talk about this is something I truly love to do. So for the most part, at least for the time being, I will always be available at least on YouTube, even if my private community turns off at some point and becomes, closed off. That's not in the cards for right now, but it may be. I don't want that community to have too many people because it's exclusive, and I'm very intimate with all those students, and I appreciate it the way that it is. And the results get diluted if your community gets too big, especially with the way that I do things, because I try to one-on-one. I try to be very interested in what my students do. I try to figure out all their problems and try to give them personalized solutions, because that's what it takes to be a real actual mentor, because that's what ICT does. That's what the Twitter spaces are for. That's what all these different things are for that he does. He tries to touch all the different hearts, all the different minds, all the different personalities, and people don't give him enough credit for being so good at doing that. So here he gets his credit, that's for sure. Because if it wasn't for him, I wouldn't have been able to find myself in trading. If it wasn't for, my other mentor, Joe Miller, who's also an ICT charter student of, I think, like going on almost 10 years now. So if it wasn't for those people, I definitely wouldn't have even believed in myself to do this. So I hope I'm able to encourage you as well. I hope you guys see that this stuff is very, very attainable. And, as always, thank you. Definitely spread the word. Don't forget to like the video, subscribe to the channel. And we will be back live here yet again on Tuesday. I'll be, keeping y'all updated in the free Discord. If you haven't joined that, definitely go do that. Links in the bio of the video and links to my private community if you want to check out what that has to offer. It's down there as well. Lots of other stuff is down there too. I have a weekly and daily bias checklist you can go download, which is pretty interesting. If you want to kind of follow along with what I do, or be able to do it yourself in like a list format, like what you should look at, what it should do, what the results of all the analysis you've done should equal in the asset you trade, which the example for us is indices. So I have a little template for that as well if you want to go download that. And go check that out. It's in the link in the bio. And yeah, so with that being said, God bless you guys. Appreciate you hopping on as always. Let me know if you have any questions. I'm here to help. Don't forget to spread the word. And yeah, guess I will see y'all on Tuesday. Enjoy the rest of your weekend. Don't do anything crazy. And, stay up to, or keep attention to what we're going to talk about going into tomorrow. I'm going to probably be looking at the market today as the open happens to try to observe what takes place. Maybe I'll throw on an extra live so we could sit and watch the open. Maybe. Depends on what I got going on. But yeah. With that being said, though, we'll put a ribbon on it. And thanks again. And God bless y'all. Have a good rest of your weekend. Let me know if y'all need anything. And I will catch y'all on Tuesday on Tuesday around 6:30. Because news is at 7 a.m. Okay, so yeah. So God bless you guys. And I will see y'all then. Take care.